Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Wednesday, February 4th. Thank you, everybody, for being here. We are officially in the first trading week of February, and we have had a little bit of a rough start to the year, to the month, to say the least, as yesterday was not necessarily the best for a lot of growth stocks. Value stocks actually did pretty well yesterday. Your Verizons, your Coca-Colas of the world. And we have a variety of headlines that are going on that are probably affecting these stocks and are continuing to affect these stocks. I think the biggest story right now, and we're going to start with this story as we get into everything today, is the SaaS carnage. SaaS stocks took a pretty heavy beating yesterday. Once again, Shopify, Microsoft, Rubrik, Datadog, IGV was down about 5% yesterday. It's down another 1% in the pre-markets. Year to date, IGV, which is the software sector ETF, it's hit 17% down. So I really do want to spend some time today in talking about what exactly is going on, why this is happening, how this is playing out, and what we are going to have to do about the way software is acting the way it's acting, and quite frankly, if there's any opportunities here. But there are a lot of different takes, and the reason it fell yesterday is because Anthropic put out some new lawyer agent tool, and that once again reaffirmed this argument to the street, which is that, hey, AI is commoditizing software. I mean, Intuit was down 9%. So a lot of this stuff has just been pretty aggressive. Uber right there up 2.5%. Uber did have earnings. Uber fell to $69.42 in the pre-market. Now it's basically back at 80. So you're talking about a almost 10% swing, a little bit more than 10% swing right there. So we'll talk about those earnings, and we'll go deeper into what they had. Novo also had earnings this morning. Not only did they miss on earnings, but they also decreased their sales guidance yesterday from negative 1% in expectations for fiscal year 2026 to negative potentially 13%. The stock was down 15% yesterday, down 5% in the pre-market. This was actually a big winner in the beginning of the year. This one has eliminated all of their gains. So we'll talk about that as well, as that one is getting hit. And then we have a bunch of other earnings. We have a bunch of other earnings that we will talk about, a bunch of headlines from yesterday. You had Jensen talk a little bit more about Openai. I think it's a little sus, to be honest. He was on last night, and we'll talk about some of his comments. You have a shutdown that we're not really having anymore because Trump kind of pseudo-funded the government, at least for the next couple of weeks, and hopefully that is good for the markets. But I think realistically yesterday, the reason why people were so upset is because we had a sell-off, and everyone was trying to understand why we had a sell-off. Robinhood took it on the chin yesterday. AMD, great earnings. I mean, the Bloomberg headline after AMD earnings was AMD disappoints because investors wanted a bigger AI payoff. They beat EPS by 16%. I mean, at what point, I understand they could have beat by 20%, but 16% for a company their size is not something small. And so I think the worst part of this sell-off is everyone is just trying to understand why it's happening. And I don't think there's exactly the easiest answer to explain why. So we're going to see how the market opens today. We'll have Jose on at 10:30. AMD has been covering the stock for about 5 years now, so he'll give us his opinion on the earnings, what happened, how the street is reacting. And ultimately, AMD got hit. That might not be the best for a lot of the other semiconductor stocks today. NVIDIA is trying to get a little momentum in the pre-markets at 179.72, did close at 180, fell all the way to 176, 176.30, a very, very big number for for NVIDIA, because that is the low of the year. So 176.30, we've got to beat that number, or we've got to stay above that number. If we go below it, Uber, I keep saying Uber, NVIDIA might have a little bit more pain. So we're going to see how this plays out today, but this one will continue to be a really important market open for a lot of these names as we get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. We're going to get started with earnings. Again, thank you, everyone who came to the meetup. I've been getting a lot of pictures, a lot of DMs. Someone made an entire vlog about the meetup. I'll link it later. Shout out to Jay Russ. He made an entire vlog about this, and I was watching it this morning, and it was crazy. So for those that didn't get to see it, I'll link this here, and you guys will be able to at least get someone's POV of how everything went. But it was super cool, and we sent out the photos last night. I will make these photos public. I think I can just link this for you guys, and everyone should be able to see it. So I can probably do that right now. And it's a Google Drive that has access to all the photos. So if you weren't there, you'll still be able to see everything that that we had going on. All right, so I think let's get started with the SaaS carnage, as I think that's honestly the most important thing that's been happening over the past couple of weeks, and that has created the type of pain that we are seeing right now. Yeah, here are the photos. I'm linking it right here. You can click that link and you get access to it. Okay, so yeah, let's pull this up right here. Jensen, and I think a lot of this starts off with what's been going on with Jensen as well. JD Vance, by the way, is going to be live. He's going to be delivering remarks at the Critical Minerals event. AppLovin is tanking. Hold on, let's pull this up real quick. AppLovin already tanked yesterday. Is it tanking again? Oh my goodness. Wow. 11%. Hold on. We got to see what's going on. Did they have earnings today? I don't think they had earnings today. AppLovin had earnings? No, there's a lot of companies that are, but Lily crushed it. Let's get into earnings first, actually. Let's get through all the earnings and then we'll get into the SaaS stuff. Why is dude, this is not good. I see 0 headlines on this. Wow. Dude, there were a lot of dip bars on AppLovin at 580, 550, 570, 480. I mean, people really said this was a SaaS name that doesn't deserve to get hit, and it probably doesn't, but my goodness, this is not fun to see. AppLovin lower after ad exchanger wrote up CloudX GA launch. CloudX, founded by PoPub and Max alumni, is aiming AI agents to automate mobile ad stack management by trusted execution environment for auctions to address buyer concerns around signal leakage. And Unity, right? Unity is getting hit as well. Unity down 4%. Okay, so I mean, honestly, this is actually consistent with the first topic that we were going to get into, which is the SaaS carnage. I mean, once again, there you go. So you have a headline around mobile ad stack, which is essentially, I don't know the most about AppLovin, but you know, they handle the end-to-end stack around advertising, particularly in gaming. Mobile games, I think, is one of the biggest sectors. Look, I don't think their moat completely goes away because of AI agents from one company being deployed to do this, but the headline of that happening definitely makes the street freak out about it. Not to mention, I think AppLovin probably is trying to utilize their own AI agents to automate some of these workflows inside of these gaming ecosystems. But wow, that is not bullish. Let's check on Zeta. Zeta down about 1% as well. So Zeta, all the advertising names getting hit. TTD is probably getting hit as well. TTD down 1%. Unity down 5%. AppLovin down 11%. AppLovin is just one of those. It's a growth stock that trades at a very hefty multiple, and it always had, but the street let them get away with it. They got into the S&P 500 last year because of how good their growth is. And it goes to show you, if you don't put up Palantir type of earnings, or you're not as insulated from potentially AI automating your business like Palantir is, which, you know, Palantir down 2% right here. The street, once again, continuing to hate these SaaS names. Then it's tough. It's really tough to hold on to any momentum. Wow, this is ugly. This is very, very, very ugly for AppLovin. Did not expect that headline. You would think it missed on earnings to get it down 11%. But there it is. Okay, let's look at the other earnings numbers, and then we will continue with this SaaS discussion because I think there are some important things to talk about it. By the way, Steve called me this morning. He's writing a new article about Palantir, and he's putting a new price target on it. Let's just say that price target is a lot higher than the price that Palantir is trading at today. I mean, he was unbelievably impressed by those earnings, but Palantir is still a SaaS name, and it's lost the majority of its earnings pump, I think, because of the SaaS carnage. So the SaaS story seems to be the most important story in the broader market right now. Uber, they missed EPS by 9%, 71 cents versus 78 cents expected, 14.36 billion versus 14.3 on revenue. So revenue was a little bit of a beat. EPS was indeed a miss, not horrible for Uber. That stock did fall on these results, but then it ended up coming back as it's now green in the pre-market. Grab did partner with HESAI. That's another company that has to do with autonomous robots and AVs. Grab actually up a little bit in the pre-market, 1%. Nothing too crazy, but yes, that partnership was announced today, which was not a horrible thing for Grab. Lily, they crushed it, beat by 9% on EPS, 754 versus 693, and then 19.2 versus 17.94 billion. They basically beat by $1 billion on revenue. They beat by 8%. EPS is up 42% year over year. Revenue is up 43% year over year, which, again, for a company of this size to be growing at these levels, it's pretty incredible. Eli Lilly right there is up 8% in the pre-markets. Lilly has been one of those strong healthcare companies, but it's gone up and down. It's not necessarily had a trend of only being consistent in one direction. I think it hit 1,100 already for the year and then came back down, but it's good to see Lilly get those numbers. And that's why you're seeing a little bit more momentum in the pre-market for that one. And then you had a couple of other names that were also important. AbbVie had earnings. They beat by 2%, 271 versus 265 on EPS. Revenue 16.6 versus 16.4. Revenue's up 10% year over year. And EPS is up 25% year over year. AbbVie is down 3.2% in the pre-market. You also had UBS, which missed, if I'm not wrong. This is a larger financial institution, UBS Group. That's down 4% in the pre-market. Not the best for them. And then you had CME Group that also missed. This stock is also down pre-market, but slightly from 0.34%. Uber again right there, up about 1.82% after being down almost 10%. A couple of Trump headlines. Xi and Trump had a phone call today. Xi and Trump talks came ahead of proposed meeting in April. No further deals were provided in the report. Call came after Xi spoke to Russia's President Vladimir Putin. I forgot they are supposed to meet in April, so I guess that continues to be something that is taking place. And hopefully that'll be good for the broader market, but ultimately we're going to have to see if they are going to make any meaningful progress that actually affects the broader stock market. So those were some of the main earnings we had today, and we'll have more after the bell. Obviously, the biggest one today, I'll be live with Jose and Neil, is Google. So we'll talk more about Google, and we'll see what happens there. Google, Qualcomm, Snapchat, ARM, ELF, Symbotic, Wolfspeed, and Fluence Energy. Those are going to be the main earnings after the bell. So Google will be the biggest one. I hope Google can help us in this kind of lull that we're going through, but quite frankly, I'm not counting on it. I think Google will do well. I don't know if that's going to be enough to get the market to be super, super excited. By the way, a Chinese trader made a $500 million bet against silver. A futures firm in China made more than $500 million after shorting silver ahead of its recent price plunge. The firm built a large bearish position in late January, equivalent to about 484 tons a year of silver, as price topped $100 an ounce. The gains highlight extreme volatility in precious metals. Silver and gold actually have not fully recovered, but I mean, you're seeing a little bit of a move back to the upside right here. Gold, once again, back above 5,000. Silver is up 10% today, back above 90. They made a nice little 500 million on Friday as silver was down 30% on the day. I mean, again, these rebounds, I don't know if you trust it. I don't know if you want to trust it. I quite frankly don't even want to be part of the story anymore. These assets should not be moving like this. And the fact that they are, at this point, I think they've just become speculative entities. I really do. And there's probably obviously fundamental theses around these products, but the fact that they move like this, it doesn't seem real. And there's plenty of money to be made on the upside or the downside on how this is playing out. We are not going to get jolts today. We are not going to get any data until the government reopens. Now, I know the funding deal was signed yesterday, but it's going to take some time for them to officially reopen the BLS. So, I mean, I don't think we're getting any data today. Maybe we do. We got some private sector jobs data that we'll look at, but I don't think we're getting actual jolts data. Do we even get ISM today? I mean, we should be getting ISM even if the government's closed. So hopefully we see if we get some of that. But jolts, probably we're going to have to wait until next week again. Hims and Hers launches multi-cancer early detection testing, connecting customers to cutting-edge proactive care. Let's see if that's helping the stock at all. Hims is up 5%. Okay. 2670. All right. We got a little something there. Hims launches multi-cancer early detection testing, connecting customers to customer edge proactive care. Hims right there getting a little bit of momentum. We'll see if we can get more details on this one, but Hims right there is up 5%. Okay, so let's get into some of the SaaS stuff that's going on real quick. Let's look at the jobs data because we did get that jobs data today. U.S. private sector adds 22,000 jobs in January 2026, following a downwardly revised 37,000 rise in December and below forecasts of a 48,000 rise. So that is probably what sent some of the pre-market into a little bit of red, as we didn't fully add the types of jobs we're adding. This is ADP private data. So this is not governmental data. This is not non-farm payrolls. I don't think we're getting non-farm payrolls on Friday either. Now that the government's open, maybe we do, but we'll see if we end up getting that on Friday. But private businesses in the U.S. added 22,000 jobs following a downwardly revised 37,000 rise in December, below forecasts of 48,000. You know, the funniest thing about this, I was talking about this with someone last night, is that December, the reason we cut is because of fear of the job market. January, if you heard JPOW, the reason we didn't cut is because lack of fear around the job market. Right now, the next meeting in March, the chance for a cut is at 10%, so it doesn't seem that likely. It's kind of weird because in a month, the Fed changed their opinion on the downside risks of the labor market. And again, maybe the data helped change their mind, and the data has been pretty reasonable for the labor market. But then you hear Amazon laying off 30,000 people. You see these ADP numbers that are coming in 50% worse than expected. Like, you start to think, in a month, can we change our mind about the labor market if we had a thesis and then a month later we're like, oh no, the labor market's fine? And if it's not, it begs the question, is it going to bite us in the ass if the labor market is actually not good? And, right now we're seeing some carnage in the broader stock market without any real macro data to support it. A lot of it's just like, oh, SaaS is dead, yada, yada. Imagine if we had real macro data to support it, and that macro data was rooted in like unemployment. That would be a big hit to the market. And so I think it's something we definitely have to keep an eye on. Palantir right there, down about 2.5% of the pre-market. Nvidia is down. AppLovin continues its decline. Looks like this thing wants to go below 400. And the problem with buying these SaaS names, we can transition into this topic now, is that you just don't know when the carnage is going to be done, or if there is any legitimacy behind the carnage in the first place. This is a post that I thought was really important yesterday to highlight what exactly is happening with SaaS in the context of Claudebot. So for those that haven't heard about Claudebot is this new open source AI agentic framework that has gone absolutely viral. For those that haven't heard about Multibook is basically Facebook for agents, or I should say Reddit for agents. And agents are just like you and I would go on Reddit and talk about their own subjects, being prompted to talk about their own ideas and then autonomously proliferate different concepts of things they want to talk about. Now it's called OpenClaw. It's kind of crazy. It's very Terminator Singularity-esque, but it has created a lot of issues in regards to how people are thinking of SaaS. So I thought this person's take yesterday was really important in terms of what played out. SaaS is continuing to get murdered. I will tell you 100% without a doubt, having pushed my Claudebot extremely hard. In 24 months, the vast majority of software will be built start to finish with a similar tool. There's no need for an IDE, no need for vibe coding, no need for Cursor or anything else. There will be really no need for an offshore development team. The Claudebot will do everything: front end, back end, database, infrastructure, project scope planning, communication, and more. What it can now do is rather deep and complex work. Give it 24 months, it will be building almost everything needed. Maybe more importantly, it will maintain all 24/7, 365 English language interactions by anyone basic MS Office skills. Your admin will tell Claudebot to update or change something in the software whenever it's needed. I mean, if this is what's happening and we're eliminating essentially all the ideas around software in any type of meaningful capacity, then yeah, like I understand why the market is getting hit the way that it's getting hit, or at least why SaaS names are getting hit the way that it's getting hit as well. One could argue it is a DeepSeek moment for software. That is exactly what Morgan Stanley said yesterday. By the way, we have a headline: Amazon could use customized OpenAI models for Alexa. Maybe that's why Amazon wants to give $50 billion to OpenAI, I guess. But JP Morgan right here said today that Anthropic is eating SaaS and the model is collapsing with the software model, as there are no stocks to hide. So, it's a very logical report around, or it's a very in-depth report explaining the logic behind the SaaS sell-off, but also the illogical nature of why SaaS is selling off, aka you can't just have some open source framework inside of your enterprise if you've had ServiceNow for like the past decade. Like, it's a lot of this stuff is not getting replaced overnight, which is why it feels a bit ridiculous to imagine that when ServiceNow says, hey, we're going to grow 20% next year, all of our, free cash flow is going to grow, our margins are going to grow, et cetera. We're going to buy back $5 billion of stock, and still you think that Claude's just going to eat ServiceNow's business. It feels a bit ridiculous. But nonetheless, if the market is forward-looking, and the forward-looking nature of the market continues to be saying, hey, this is the future, and Anthropic's going to win everything, then I guess if every SaaS company just becomes commoditized by Anthropic, that is how the market's reacting. Here is what Jensen had to say about this yesterday as he addressed the concerns around the software ecosystem.
You just give us your top of mind on physical AI.
Remember what software is. Software is a tool. There's this notion that the software industry is in decline and will be replaced by AI. You could tell because there's a whole bunch of software companies whose stock prices are under a lot of pressure because somehow AI is going to replace them. It is the most illogical thing in the world, and time will prove itself. Let's give ourselves the ultimate thought experiment. Suppose we are the ultimate AI, artificial general robotics, the ultimate AI, the physical version of us. You could, of course, solve any problem because you're humanoid. You could do things. If you were a human or robot, would you use a screwdriver or invent a new screwdriver? I would just use one. Would you use a hammer or invent a new hammer? Would you use a chainsaw or invent a new chainsaw? Just don't. First of all, ideally, they don't use it at all. But do you understand what I'm saying? If you were a human or robot, artificial general robotics, would you use tools or reinvent tools? The answer, obviously, is to use tools. And so now do the digital version of that. If you were an artificial general intelligence, would you use the tools like ServiceNow and SAP and Cadence and Synopsys, or would you reinvent a calculator? Of course, you would just use a calculator. That's the reason why the latest breakthroughs in AI is what? Tool use. Because the tools are designed to be explicit. There are many problems in our world where F equals MA. Please, could you please not come up with another version? FA is not kind of MA. It's just MA. Do you guys, Ohm's law, V equals IR. It's not kind of IR. Approximately IR, statistically IR. It is IR. Okay, do you understand what I'm saying? And so I think we want the artificial general robotics, artificial general intelligence to use tools.
So who's buying it, right? Who's buying it? I mean, you could tell there's a little bit of weirdness in the argument. You could tell maybe the confidence is not exactly for that extreme with how Jensen talks about so many other things in the broader industry. And I think this is why SaaS continues to get hit. I mean, if Microsoft is trading at $409 right now, down at these levels, Microsoft, which is not even seen as a SaaS company anymore, in my opinion, it's more of an AI infrastructure company, given Azure is not SaaS, like Azure is cloud compute. HIM's, by the way, up 6.7% right here. It's incredible. And the fact that they're taking Microsoft down means Zeta, ServiceNow, CRM, Adobe, they don't have a chance. Adobe, CRM down another 1.3%. Adobe right here, down another one. Adobe's at 267, dude. This is the lowest level since 2022. I mean, this is just, it is becoming unfathomable to understand why the street is taking these names down. The only way to kind of to reconcile it, AppLovin right here, touched 396, hit below 400 for the first time in 7 months, is this idea that AI is going to commoditize all of it. And again, is that accurate? Is that actually going to happen in the next couple of years? I don't think so. But if the perception is that it is, it's like this whole, I mean, first of all, no one can say AI is a bubble. Like, you can't say AI is a bubble if it is literally taking down every single software company on the planet outside of Palantir, including Microsoft. Like, if AI is a bubble, I don't think it has the capability to take down AppLovin and ServiceNow and Salesforce, because literally the headline of Claude being more effective at a customer relationship management tool is the reason why Salesforce, a once $300 billion company, is now worth $184 billion. Which should be bullish NVIDIA, should be bullish AMD, because if, every big enterprise in the world is replacing CRM for some Claude bot, which again, I don't think is happening, but let's say that were to happen, you would need a lot of compute. It would actually be really bullish for the hyperscalers. So the semis actually should be going up on this news. The hyperscalers should be going up on this news, but they're getting dragged down with it. It is very confusing. One argument you could say is that ServiceNow, et cetera, pays a lot of money to a GCP, for example, if they run a lot of their cloud compute on Google. And if ServiceNow doesn't have any more customers because their entire business has been commoditized, then they're not going to be paying Google as much money. So like whatever amount of money, one could argue, I'm making this up, it's like $1 trillion that's spent in the software industrial complex. If that goes away because it's all commoditized, which again, sounds even ridiculous as I'm saying it, that is why these SaaS stocks are getting carnage, but also the hyperscalers are getting hit as well. And unfortunately, that might be some of the pain that we're seeing right now. Adobe ramped up its advertising in 2025, spending $1.4 billion to promote its brand in the face of steep competition and skepticism from Wall Street that the company is a loser in the age of AI. I think even that headline right there is hurting Adobe stock. The fact that they're having to spend on marketing to prove they're not a loser. I mean, if the growth rates are not proving that you're not a loser, then unfortunately, the market is going to perceive that you are a loser. Now, again, do I think Adobe is the best company in the world? No, it's also not even exciting to me to invest in. I think there's so many other alternatives, and I have my own reasons for why I do it. But like this valuation, it's almost like they're getting ready to take it down 70, 80%, which just doesn't feel reasonable given you have other high beta names that are up 70, 80% of the year, and they don't make a dime of profit, much less a dime of revenue. And I think that's why people are just thinking, what stage of the market are we at right now for this to be happening? And then not to mention, you had this happen yesterday, which was not good in my perspective for NVIDIA and OpenAI. Here's Jensen clearing up the air around the partnership with OpenAI.
That you want to walk away from a major initial investment of $100 billion into OpenAI, that it's stalled, that you're not that interested, that there's been a lot of private criticism, even for the $10 billion per 1 gigawatt that you put in. Can we end this? Is there really controversy about this?
No, there's no controversy at all. It's complete nonsense. We love working with OpenAI. We are incredibly honored and delighted to be able to invest in their next round. And so we're privileged that they're inviting us to invest for each one of their rounds. We would love to be invited, and we would consider, of course, investing in it. This is one of the most consequential technology companies in history. And this will by far be one of the most exciting investments. And I'm delighted to be invited, and we'll consider every single one. We are going to invest in their next round. We're looking forward to Sam closing it, and he's doing terrifically. And we will invest in the next round. There's no question about that.
Okay, then it is confusing to me why both the initial deal that was announced, and we were talking about one that has not been confirmed, where you're talking about putting money with them. This is separate from the second one with the deal, in order to be able to invest, again, to be able to make it so that 1 gigawatt, 10 billion. And then the second thing about the investment with the in a possible IPO, we keep hearing from the Wall Street Journal, from Reuters, the deal's on ice, that it can't be done, that there's so much dispute. Another thing that makes me upset, Jensen, is that perhaps it is possible that there's motivation here to kill the deal, because I'm not hearing anything from either party that sounds like this.
Well, nothing that we're doing on the inside is that dramatic. You know, there's a lot of stories about it, but I think that OpenAI and Sam are doing a great job raising this current round. This will be the largest private round ever raised in history, and I don't know any other company that possibly could do this. I mean, all of this is possible because the amount of offtake, the amount of traffic, the amount of interest that they have in their product. What they need more than anything right now is compute. When they have compute, it will directly translate to revenues for them. Because as you know, in the world of AI, infrastructure, the computing, the AI factories is what produces the tokens, the AI that ultimately drives their revenues. And so the more compute they have, the greater revenues they will have. And so their trajectory, their revenue growth trajectory is going to be unlike anything the world's ever seen. And this is a great investment opportunity. I'm delighted to do it. In working with OpenAI, there is no drama. This round's going to get done. It's going to be the largest round in history. It's going to be oversubscribed.
Okay, remember,
it's going to be.
There are two rounds.
Doing terrifically.
There's two rounds. There's a September deal, where you talked about 10 billion per gigawatt, and that was pre-AMD, for instance. And then there's the round for the IPO. Are both of them on? Because the first one there's a lot of talk that one has just kind of gone away, that you're not going to do that deal, the original 100 billion. This is the last I will ask of this, because I think we can put the end right here to questions about whether that first deal is on or off.
The first deal's on.
It's on.
I think I think there's a round that OpenAI is going to do, that Sam's going to do before the IPO, and if that round is on, then we're in, and I think the round is on. Okay. And then there's of course an IPO in the future, and we love to be participating in that as well. And so this is a fantastic company, and this, I've said before, this is a once in a generation company. We're delighted to invest in it.
Well, it doesn't sound like that there's a rocky relationship between the two. It doesn't sound like the deal's on.
What do you guys think? We heard that last night live on the market close. I love Jensen, but I do not believe he is happy with OpenAI. But he's also very politically correct, and he will never talk shit about a competitor, or a partner. And they're a pretty big partner for them. So it makes sense why he's saying everything's okay. Does not feel like everything's okay. Lisa Su is live. Let's see what she has to say about these AMD earnings. AMD in the pre-market, unfortunately, after a 16% beat on EPS, down 9.5% as we head into the market open.
The most important thing is we're actually seeing our data center business actually increase from Q4 into Q1, which is a show of the strength of the business, both on the CPU side, which is going like gangbusters, and with our AI capabilities and GPUs. We're seeing very nice ramp into the first half of the year, but yes, we're going to have an inflection point as we go into the second half of the year with our new, MI450 series and our Helios rack systems.
But let's start with that, Lisa, because one of the things that I think is important that people don't understand is that, yes, it's absolutely true. The Vera Rubin certainly.
Right. And that's exactly the sweet spot for our MI450 series and Helios. So we're super excited about how that's coming up. The development is going extremely well, and we're working closely with our customers and the entire supply chain to bring that to market in the second half of the year.
Lisa, I want to just go back to a comment you just made where you said AI is accelerating at a scale I would never have imagined or not have imagined. And I just want to understand that a little more. Not have imagined when? Even recently? And what do you mean when you say it? And, again, this rate of change is so quickly. Is it only going to increase?
Well, David, what I would say is, with every period of time, like if you had asked me 6 months ago, I would say, hey, demand is strong and we're continuing to see good signals from, our top customers. I think when I say that we're seeing an acceleration, I would say in the last 60 to 90 days, we have actually seen an acceleration, particularly when we think about 2026. And, that comes in terms of, demand patterns, forecasts, and just the general feeling like there's not enough compute out there for everything that wants to be done. And you've heard that from a number of our top customers, but I can say that we see that on the inside. There's a desire to ramp compute more quickly. And as we said at the top, it is not only for the GPUs, but we're seeing very, very strong demand for CPUs as a result of all of this AI enterprise work that's going on. There is actually pulling more CPU content, which is a great place for us to be.
No, and we've watched your stock price respond to that as well. Coming back to the rate of change, we've been talking, and you probably listened at the top of the show and certainly after yesterday and many days lately about software companies very much concerned perhaps amongst investors about their future business given the tools that we're seeing happen almost every day. How do you view it as somebody who's been in this ecosystem for so many years, Lisa? Should investors be concerned about software companies' ability to compete when Claude or OpenAI can come with a new tool tomorrow?
I think the real key is what we're seeing with all of these tools, and we're working very closely with the model builders, is that we have to integrate what the AI tools are capable of with our basic development capability. And that's true for hardware guys, that's true for software guys. We have to take the power of the tools and actually, make our products, better, get them to market faster, really, accelerate the rate and pace of innovation. And that's exactly what we're doing. I think the disruption comes from, those who are able to take and harness the power of AI, and the closer that we work between sort of the largest foundational model guys and sort of the innovation that we're trying to drive at the engineering level, I think the better the overall product outcome is going to be. And the benefit of that is, frankly, the entire ecosystem, because we're going to accelerate the rate and pace of innovation.
You are getting to an interesting argument that we're hearing a lot more often, though, Lisa, and that is that it's not that AI is not getting more capable. It's that regulatory uncertainty is there. There are skill gaps within organizations. It's expensive to integrate. I wonder if that's what you think the bottleneck is eventually going to be.
Well, I actually think, Carl, that the rate and pace of usage of AI is going to accelerate. I think the tools are getting much better. I think for all of us, when I talk to enterprise CEOs, everyone is very focused on how do they sort of reskill their workforce. We're doing a bunch of that ourselves. And it is about how do we utilize the AI tools. I think that's the mantra of how do you build a great company, is to figure out how to integrate AI into your workflows versus worry about is it taking over. I think the fact of the matter is it's a tool that makes all of us better, that makes all of our companies better, and the foundation of that tool is the computing that we provide.
Lisa, there was a deal that you made with Openai back in October, 160 million shares. You gave them basically be their customer, and could be worth as much as $38 billion now. But one of the things that struck me was this was a deal that was done in October. Just a couple weeks before that, NVIDIA had a deal that was, I thought, an exclusive deal. I guess it wasn't. Were you working on that deal at the same time that Sam Altman was working on the NVIDIA deal?
Well, Jim, let me say a couple of words about OpenAI, because they're often a topic of conversation. First of all, fantastic partner. I think really at the bleeding edge of the usage of really enabling all of this AI world. And we've been working with them for a couple of years in terms of closely aligning our roadmaps with their needs. We're very focused on inference, which is key right now. When you think about AI adoption, we want to get the cost of inference down to enterprises and overall users. And so we're super happy with our relationship with OpenAI. I think things are going great. We're right on track with our MI450 and Helios launch. OpenAI is going to be one of the leading partners adopting that. And I think you're going to see a case where you're going to use lots of compute in the ecosystem.
Well, let me ask you, do you think it'll be difficult for them to raise all the money they need, or will they raise even much more? Because, just in the last few weeks, we hear that they're the Achilles heel, that they may be not able to raise the money. It seems like, judging by what you say, it shouldn't be a problem.
Well, what I see, Jim, is an incredibly innovative company. A lot of respect for Sam and Sarah and Greg and everything that the team is doing. And when we look at the AI ecosystem, though, I want to say that it's really a broad ecosystem with a lot of innovation across the board. So, from this standpoint, what we're seeing is still significant support from the capital markets around AI. We see that in private companies. We see that in the large hyperscalers. And from the overall standpoint, I think people are thinking the right way, which is this is a multi-year, multi-generational bet. And there's been no technology like AI in sort of our history. And so this is about making the right investments at the right time.
All right. Well, Lisa,
do you think 6 months from now we're going to hear you say the same thing, that you could not have imagined the pace of acceleration, or do you think you got it right now?
I think, David, you're going to see it in the numbers. And,
I don't know, bro. I don't know if I believe Lisa. I don't know if I believe Jensen. The OpenAI thing just seems so unbelievably suspect, dude. Let's not forget Brad Gerstner basically said OpenAI cajoled, aka manipulated the market to believe they would spend this much in CapEx. Then they did a deal with Jensen and Lisa at the same time. Remember, Jensen was not really happy about that deal. People forget when he went on CNBC after that OpenAI deal was announced, he was a little pissed, to say the least. And I think ever since then, Sam Altman messed up the relationship. Like, it really did not seem like Jensen liked it. If you guys don't remember, this was 3 months ago after that deal came through.
You read it?
Yeah, I saw the deal. It's imaginative. It's unique and surprising. Considering they were so excited about their next generation product, I'm surprised that they would give away 10% of the company before they even built it. And so, anyhow, it's clever, I guess.
Yeah,
It's clever, I guess. I think ever since then, it was going downhill. And so, look, I mean, Openai is probably going to IPO. They're probably going to get to $1 trillion. The question is going to be, can they continue the growth rates and the CapEx commitments to make this happen? And I guess time will tell to see how that plays out. But it's definitely creating a little bit of a cloud of uncertainty around the broader AI market, which is why NVIDIA and AMD stock potentially have not been doing the best, or Microsoft with their RPO being majority OpenAI. Enphase is up 30% pre-markets right now because from my understanding on the call last night, they have officially said they are entering into the commercial sector for solar, not just residential. They've been a majority residential business. Now it's more commercial. If I was a CEO of Enphase, I'd pivot the entire company tomorrow and say we are going all in on solar for data centers. That's not what they said yesterday, but they kind of hinted to an extent around that argumentation. I didn't fully go through the call. The numbers were like not horrible, but they also were not amazing. And that's why I think that stock right there is up 30%. This might be a big momentum play, or it might get dumped as soon as the market opens. HIMS introduced some new tools for preventative cancer screening. That's why that stock is up 7%. Oracle obviously has been getting hit. Oracle again down 1%. Pre-market's 153. We got the market open in about a minute. Uber goes back down 2% even after a decent earnings. Tesla's down 0.5%. Adobe down 2%. Nvidia back down to 179. Bitmine down 2. Bitcoin has been getting hit pretty bad. Mike Novogratz, who's the CEO of Galaxy Digital, which is now an AI HPC play, but was originally a Bitcoin miner, he said on their earnings yesterday that one of their major institutional clients sold $9 billion worth of Bitcoin because of fears around quantum. That's what he said yesterday. So, I know we're all having our own theories around why Bitcoin's going down, but Novogratz confirmed one of their clients that custodies their assets through Galaxy sold because of quantum. And as a result, you have that headwind now on Bitcoin, 75,195, as that one is down 2% right here in the pre-markets. All right, here we go. Let's see what happens as we get into the market open. Again, it's been a rough couple of days. We got to see how this plays out. I will do the red or green poll real quick in the chat. Green or red, what do you think happens? Google earnings today after the bell, and we'll see how this market opens up. Wednesday, February 4th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. NVIDIA opens down 1% on the day. You got NVIDIA going red as we open. 176, that's the key level right here. 176. Yesterday, I think it got to 177 at the lows. 176, that's the big one to see. If we lose that, that would be the lows for the year. Amazon, 238, that's down. Microsoft, 411, that's slightly green, although that was at 408 in the pre-market. Uber, down 2.5%. That is down. HIMS loses 2% immediately. That is now openly up 5%. It was up 7%, as that one is still green on the day. Grab is up 1.4% on the day. Eli Lilly, they crushed earnings. They deserve it. That's up 7.3%. AbbVie, I didn't think the earnings were that bad for AbbVie. I guess the street thought it was bad. That's down 7.2%. SMCI actually had a really good earnings. They beat guidance by $2 billion. Gross margins were slightly down, but outside of margins, it was a good earnings. So SMCI up 7.3%. I don't know if it's, an earnings that re-rates the company back into the $50 range, but it wasn't a bad quarter. And so if you're playing it for the earnings, you're up 7% as that one goes green. Snowflake down another 3%. Intuit down another 3.2%. Let's go to our SaaS names. CrowdStrike down 3. Zscaler down 2. Intuit down 3. ServiceNow down 2. Adobe down 2.7. Mongo down 4. Atlassian down 1. Palantir today is not surviving the SaaS carnage. That's down 3. Snowflake's down 3. Datadog's down 2. Oracle's down 3. Oracle below 150. My goodness. AMD, I don't even want to look. 12% down. AMD doesn't deserve to be down 12%. That was a good earnings. We didn't listen to the call, but we'll have Jose on a little bit to help us explain the numbers. The Bloomberg headline was that AMD didn't surprise investors enough. So if AMD went down 12% on a basically 20% EPS beat, I would imagine NVIDIA has to really, really put up some good numbers to get the street to not be too upset. NVIDIA right there, 177. That goes down 2%. Where is Hood? We talked about Hood yesterday. Hood's down another 4%. I think the problem with Hood is twofold. Number one, they're being used as a crypto proxy. Number two, the market might be thinking that trading volumes have topped for the cycle. Even those two reasons to me are not enough for this to be getting hit as badly as it's getting hit, but it's getting hit. And I mean, Jason on the TA said 75 seems very likely if we continue to lose any level of momentum above 85. 85 was actually the core support from 2021 IPO days. So we just lost 85, which is not good. And unfortunately, that stock is getting hit down about 4% right there. So Hood, Palantir, Tesla, NVIDIA, a lot of the names from last year. SoFi, I mean, FinTech also, SoFi down 2% right here, is not in favor. So when you got FinTech not in favor and you have these names that have some aggressive valuations, I mean, you're going to see a little bit of a correction. And I think that's what we're seeing right now. PayPal's about to go below 40, which is a bit aggressive. Admit you still have Hood puts. I never bought Hood puts, but I did sell calls. And that's why I just like it was the responsible thing to do. At some point, if something is a massive, massive position, you have to hedge it. And Hood is what I hedged. Part of the reason I didn't hedge NVIDIA is because NVIDIA, in my opinion, would not be as volatile as Hood. And NVIDIA is down from 187 at the beginning of the year to 175, 177. Hood's down from freaking 120 to 83, which is not what I thought would happen, but definitely what I thought had a possibility of happening. And the most responsible thing at that point was to have a little bit of protection. So the pain hasn't been felt, but it's still down. So the gains have gone, but the gains on the calls have made up for the gains that have gone. The question now is the timing of when do I buy the calls back and kind of get to double dip, because essentially now I got what I wanted with getting the calls to go down so much in value. I'm basically up like 65% of the calls. But is this the bottom? Because if it's not the bottom, I would rather leave the calls on. So it's one of those things where you have to ask yourself, what is Hood going to put up in earnings? And, on earnings, if they put up numbers, but the numbers aren't as good. I mean, if Microsoft went down 10% on phenomenal numbers, would I be shocked if Hood goes down 10%? No. So it's a very confusing time right here, but unfortunately, a lot of these names are just getting hit. VG, that's down 2% after VG was up 5% yesterday. Verizon, that continues to be a safety. 47 on Verizon. Verizon, Coca-Cola, J&J, all of these stocks, people are running to safety for green. I don't know if selling your NVIDIA for Verizon by the end of the year is going to be the best move to make. But right now it's working. And maybe that's a momentary thing, or maybe that's the beginning of a 2022 type of carnage for the market. I don't think we're going to have 2022, but then again, if the market wants to go down the way the market's going down, then maybe that has a chance of happening. Wow, SanDisk down 9.2%. Not the day for memory. Micron down 4%. Your memory names are getting hit. You thought those were potentially insulated. Seems like they're not. Critical Metals down 6%. MP down 1%. USAR is also down, unfortunately. USAR is down 7%. Now, Vance is literally hosting a summit right now live around rare earth metals. And still, these stocks are getting hit. So the high beta names in this sector are not holding up. How about Quantum? D-Wave is down 3%. How about Rocket Lab in space? That's down 4%. Rocket Lab, see, and Rocket Lab was $81 yesterday. Didn't really make a lot of sense to me when the entire market was down. Rocket Lab's now down 3%. It could obviously recover to 81, but a lot of these names that are rallying on deep red days just feels kind of fake, especially when they traded incredibly high multiples. ASTS is also down 4%. Now, again, can't say we can't say we don't get a V-shaped rebound recovery across the entire growth stock sector, but it's kind of tough to buy the only thing that's growth and green on a day when everything's red, because it could just be fake and the next day it dumps, which is kind of what we're seeing in a variety of different sectors. Salesforce down another 3% right here. That's getting hit. Where's the S&P? S&P 690. S&P's green. It's not tech that's holding it up. You got a variety of other stocks, financials and healthcare, Eli Lilly in particular. That is helping. 1,084. That's up 7.8%. Meta, they are taking her back down to where she was before the earnings, 740 to 683. Meta is not contributing to the excitement of the tech sector. Gold is up 8%, gold's up 2%. Silver is up 8.7%. So those are still holding on. Google, they've got earnings today, 341. I'm optimistic about their earnings, but I don't know if that's going to be enough to save some of the tech names that have been getting hit. BMNR, that's down 2%. Snapchat is now about to go below $6. This is just ugly. This is absolutely ugly. Chipotle also is getting hit. It was down actually more yesterday. Now it's only down 2. It was down 7. So Chipotle, they beat on EPS, missed on revenue. Street is not loving what they're saying about the consumer. That's going to get Rocket Lab down 3, USAR down 6, Intuitive Machines, that's down 4. Oklo down 3.2. Oklo was up 7% yesterday. Again, if you bought Oklo, because that was the only green growth stock yesterday, in a world of red, I mean, you just set yourself up for it going red the next day. That's why it's kind of hard to buy some of these dips, even if you're trading them, because you just don't know how they're going to react the next day, even if they have one good green day. Intel back at 48.90, that's down 1%. Duolingo went from 570 to 115. This thing's not coming back, unfortunately. Snowflake's down 3. Is Palantir holding on? Palantir is not holding on, down 5% on Palantir. Now, here's what I said about Palantir a couple days ago. If we get a meaningful dip on Palantir after the guidance and earnings we just got, I am buying that dip. I don't know how crazy the street's going to be on this one, if they want to think of it as like another just SaaS name that deserves to be down 30%. But let's see. Down 5% right here. I mean, it felt kind of inevitable. Because we were not able to hold 165, which was the really big level for Palantir after earnings, just from a technical perspective, and where a lot of resistance was, we fell under that. And if there weren't enough buyers to keep it above that level, then it was probably headed lower. And that's what you're seeing right here. Now, 147 was right before earnings. I wonder if they take us down back to the 145s. But if we get to 145 and we're headed down back to the 130s, then that's a dip that I get a lot interested in. I just wonder, after those earnings, will the street actually take it down to those levels? Coca-Cola, that's green. Verizon, again, that continues to be green. NVIDIA, that's at 179. AMD, are we still getting hit? AMD, little recovery from 209 to 215. So you're getting a little bit of a V-shape right there, which, again, we saw a lot of V-shapes intraday yesterday, only for it to end red. Quite frankly, reminds you to 2022, where randomly throughout the year, we'd get these little V-shapes, even if they last for a couple of days, and then immediately they would get hit. Now, again, 2022, you had a narrative, which was raising rates and bad earnings growth that was leading to all those getting hit. I think both of those things are the opposite in 2026. But the one thing that is the same is it's a midterm year. And some of those midterm dynamics are kind of playing out. Again, I continue to think this is not 2022, because you can't have multiple compression to the extent that we had in 2022 if you have earnings growth that's living up to the expectations. You don't need to have multiple expansion. We don't need to go to the moon, but we also don't need to go to the graveyard. And so I don't think it has to be 2022 again, even if it's not S&P 8,000. But nonetheless, I think the market's going to figure out how to price a lot of these stocks. ServiceNow right there, that's down 3.7%. Microsoft is green, 413. We did buy a little bit of Microsoft yesterday at around 413 and at least took the nibble. App11, 394, 15% down. Figma, 5% down, potentially below $20. Enphase, are we still holding 40%? Enphase, 39% on the day. It was up 28% in the pre-markets. $51 for the first time in a while. Enphase is getting back to some of these key levels. Last time it was at 50. May. Around May 21st, we were at 52. So it's been a good 8 months since we have seen these levels. 51.73 right here on Enphase. JP Morgan, I think that's probably up. That's leading to the S&P being up. Eli Lilly is up. That's helping the S&P. Tech is not helping the S&P, but a lot of these other names are. Tesla, 423. Utilities, I think, are also green. Microsoft just went green a little bit at 413. Fubo, that one's also down another 6%. SMCI, again, it was good earnings on SMCI. It really was. They beat by a pretty hefty number. So understandably, that stock's up 17%. And we'll see if the street can continue to keep that with its momentum. Chipotle still down 1%. Google at 341. As that's green. The EU Parliament has agreed to resume work on implementing the trade deal between the EU and the US. I think that's bullish. That's not a horrible headline. Oracle right here. Wow. 4% down, 148. Oracle was at 128 in April. It's at 148 today. It went from 128 to 350, back down to 148. Absolutely incredible. Fear and greed. We are at fear, but we might be going to neutral. We were at fear yesterday. I think at 42 or 43. We're now at 44. I mean, again, it's hard to say it's extreme fear when the S&P is green. right? It's just a lot. This goes back to the thesis of this is a stock picker's market. You can't say the entire market is screwing your stock because it's not. The S&P is holding up. It's just boring sectors of the economy are holding up the S&P, which might be the sectors that are in favor this year. Apple, are we green? Apple, we are also green, 276. Apple being potentially a flight to safety right here, as that is up 2.5% as well, which makes sense. Apple, Walmart, Coca-Cola, J&J. Again, I don't know if these are the names that are going to be the massive outperformers by the end of the year because they don't have the earnings growth, but they do have the safety of not being perceived as like an AI bubble or whatever, or being killed by SaaS, which is why we're seeing some of this momentum. Let me put this poll in the chat. I'm curious what people have to say about this. By the way, Basent's going to be testifying today, so we'll probably get some commentary from him. Here's half for everybody. Hap 11 right there, 397. 67% of you said we'll go red today. Here's the question I have for everyone. Do you think the SaaS carnage is fake? AKA, it's a DeepSeek moment for SaaS, which should be an absolute buy the dip across the board, just like NVIDIA, $90 because of DeepSeek was a buy the dip. And if you do believe that IGV, I think is the best way to get exposure, IGV is down 3%. If you don't want to take a chance on any of the individual companies, you just buy IGV. I wonder if we see this thing back to like 120 by the end of the year. I really do. I wonder if we see this thing V-shaped just like NVIDIA did last year, because after all these companies report earnings and the market's like, oh yeah, no one's going to kill Salesforce tomorrow. That Salesforce is pretty cheap if that happens. But I also wonder if Anthropic comes out with a CRM tool, just like they came out with a lawyer tool yesterday, if Salesforce is down 20% that day. And I think that's the fear of being in these names. Hims, by the way, losing the majority of its pump, as that was up 2%. And now that is down. I feel like this is just algos. I would also say it's algos, but unfortunately, I don't think Adobe going from 320 to 260 or Salesforce 250 to 189 is just algos. Like yes, the algos are probably selling off SaaS because they're programmed to do that as they see a compounding downside. But I do think there's like structurally institutions are just rotating out of it. I just don't think you see this much of a decline on all these names outside of people making a decision to say, let's get out. And I think that's why we're seeing some of the pain that we're seeing. S&P right there, 690. That one trying to go green on the day. Zeta, 1685. Now, look, Zeta's got to put up some really good earnings, and I think Zeta's going to be one of the names that can actually show growth. But the problem is Zeta can show 30% growth and still get hit. If ServiceNow, which is a much bigger company than Zeta, doing much more free cash flow than Zeta, can show 20% growth, which is amazing for ServiceNow, and still get hit. And again, unfortunately, this is a sector thing. ServiceNow does not deserve to be trading at 8 times sales at $110 billion market cap, doing the type of momentum that they're doing. It's just like, it is very confusing to me. And I think and this is, Palantir's not immune to this, unfortunately. Palantir 148, which is why I think people have to really ask themselves, do you think SaaS carnage is fake? Because if you think it's fake, these have to be some of the most attractive names in the market. If it's not, and that's why, NVIDIA was one of the most attractive names in the market after DeepSeek, which is why it rewarded a lot of people if you bought the dip. I wonder, could that be the same? Amazon plans to use AI to speed up the process for making movies and TV shows. Amazon says humans will be involved in every step of the creative process. AI Studio initiative aims to cut costs and streamline creative processes for Amazon. That stock is at 236, down about 1%. We do have PMI. Let's pull that up. PMI 52.7 versus 52.5 on services. Composite PMI, this for January, 53 versus 52.8. PMI is kind of a nothing burger. You're not really getting anything meaningful from that. The really piece of important information today was ADP, and we came in 50% lower than expected. 50% lower than expected. The street wanted 48,000 jobs. We came in at 22,000. The last month was revised downward from 41 to 37. Jay Powell didn't cut because he said the labor market is fine. I don't know if the labor market is fine, but that was your job. So the PMI seems to be a nothing burger. Came pretty much in line with expectations. So that probably is not going to mess with the market too much. Shopify, dude, this thing was $160. It's at 111. What is going on? Reddit, that's down another 7% as that one's getting hit as well. It is crazy, bro. This is crazy. The SaaS drawdown is like the Duolingo moment. AI is bringing SaaS down. The market psychology is shifting towards SaaS, not really being able to compete with something like AI. Yeah, and look, I understand that for Duolingo. I think we all understand that Duolingo can be replaced very easily with some like AI tool, which is why Duolingo's got hit. But that's not the same for ServiceNow or Salesforce. Or maybe it is. Maybe I'm ignorant, and maybe like these agents really will commoditize those businesses. But I mean, perception is one thing, but reality is the other. And obviously, the stock market's more about perception, and it feels like that's perception hurting these names. PayPal, 30 cents away from going below 40. It actually touched 39.96. Again, PayPal, just the prime example of why stocks being cheap are cheap for a reason. As the CEO was ousted yesterday, which definitely did not make the street that happy. Data centers getting destroyed. Let's check on them. Nebius down 4%. Iren. Wow. This thing was 63 last week. $50 on Iren. CoreWeave, is that at least holding? CoreWeave's holding a little bit of green. So CoreWeave getting some momentum. But outside of that, these other names still getting hit. Amazon goes red. Palantir 6.5% down. That entire earnings move is $2 away from being completely eliminated. PayPal still down 3, SoFi down 1, and then Robinhood down another 5%. Wow, Galaxy down another 5 too. All your data center plays, APLD down 3.4. CrowdStrike, are we losing it? CrowdStrike down 3%. That's getting hit as well. Rubrik, which I know a lot of you guys like. Dude, this was like, wasn't this freaking $55, $60 on Monday? Goodness, $49.70. Like some of these prices are actually just getting funny at this point. Like AppLovin 386. You know what this is a reminder of? This is a reminder of stocks are fake. Like it's like you don't even get a certificate now when you buy. At least back in the 80s, you got a freaking certificate. Now you just get this like digital representation of, oh, you bought a share of AppLovin. It's like, bro, 750 to 380, like stocks are fake. It's unbelievable. 16% down on AppLovin. Every level of support, every level of volume resistance, all that shit out the window. Multiples are fake as well. Yes. Like obviously I'm being facetious here, even though I still can't say that word. But like this is just, it's incredible to see that type of decline. Matt, thank you for the 10 gifted memberships. Appreciate you, Matt. 10 of you guys got gifted memberships because of Matt Money and Go Falling Knife. Thank you for the $200 super chat. Very, very kind of you. Really appreciate it. And thank you for the super chat. Brandon, thanks for the super chat. What's your take on the broader indices being only down 2 to 4%, but individual names getting smoked and beating on earnings guidance, and those being down 10 to 20%? I think the answer is that the individual names in the indices, like a JP Morgan or a Eli Lilly, are holding up the indices, or a Walmart, for example. It's Hood is a part of the S&P 500, but it is not the biggest part of the S&P 500. JP Morgan has a much bigger weight than Hood in the S&P. And if JP Morgan is green, Berkshire is green, Eli Lilly's green, J&J is green, Amgen is green, Walmart's green, Coca-Cola, Procter & Gamble, Pepsi, Caterpillar, John Deere, etc. Those are the names that are making up for the slack of NVIDIA and Broadcom and Micron and AMD and Oracle and Palantir and CRM and Intuit and ServiceNow, etc. So I think the answer to your question is that we're seeing a rotation into value. And maybe that's the play for the year. I kind of doubt it right now, but obviously the street is acting like that. CoreWeave just went red. Palantir, wow, 145. There is the sell-off. There you go. NVIDIA also getting hit pretty hard right there, but there it is, folks. Robinhood looks like she's about to lose 80. Robinhood looks like this is now, okay, so what's green? S&P is ready to go red in 33 cents. You're seeing a 950, call it glitch if you want, but complete deleveraging out of many companies. NVIDIA down 1, AMD down 13. AMD was 255 on Monday. Microsoft 410, Figma down 6, Rocket Lab down 5, D-Wave down 3, ASTS down 6, Meta 677, Trade Desk down 3, AbbVie down 7, UBS down 5, Venture Global actually gets a little bit of green right there, 950, Novo down 5, SanDisk down 7, Broadcom down 2, Amcor is holding on today, a little bit of green. Silicon Labs is up 50% because Texas Instruments is buying them out. That's why that stock is green. Bloom Energy, that's down 6. Path is down 7, or Path is down 4. Home building stocks are up a little bit. Pepsi's up. ExxonMobil's up. Ondas is down 6. Strategy's down 4. What the hell is going to happen to Saylor, bro? Like, he's kind of bag holding 50 billion of Bitcoin at this point. I mean, this is getting ugly at this. Rich Tech Robotics, this stock was hyped up last week. Down 30%. I mean, Zeta down 7. Shop down 7.5. Tesla, is that holding some green? Tesla is flat, but it's at 420. I was with Jason yesterday. I'm surprised Tesla's held above 400. And I think one of the reasons it's held is because of the SpaceX rumors of merging. But, I mean, the earnings weren't good. So, yes, there's a fundamental thesis. Yes, there's a lot of potential, yada, yada. But it has not been I mean, I know 490 to 420 is pretty ugly, and maybe that's enough. But the fact that it's holding the 400s, I think, should be good for some of these Tesla bulls. AppLovin, are we losing 380? We got to 390. All right, bounced on 383. SoFi down 3. SoFi is looking like she wants to go below $21, $21.15. Again, with SoFi, it was a multiple compression story. People were willing to pay 49 times at $27 because you got, pretty decent growth. You're still getting pretty decent growth, but people are now only willing to pay 35 times. And it feels like across the board, it is a multiple compression story on names that had high multiples. But it's confusing because then you see other shit that also has a high multiple that's not doing, not even close to the revenue that SoFi is doing, not even close to the EPS that SoFi is doing, not even close to the EBITDA that SoFi is doing. And those have higher multiples. And that's why it's a really confusing market. Like, why are those names getting the bid? Or are those names getting ready to lose their bid as well? And that would kind of complete the flush out that we're seeing. Meta right there, 678. That's down 2%. Silver and gold, what about those? Those should be up today if the stock market's down. I mean, they're up. Silver's up 8. Gold's up 2. They're not really breaking through the levels they were at in the pre-market. Silver kind of needs to break above 92. Gold needs to be above 5,100. But, they are green still on the day. Elvis, thank you for the $20 super chat. Again, very, very kind of you. You did not have to do that. Appreciate it. Thank you for the super chat, and thank you for being part of the stream. Again, Apple as well continuing to get a bid here, as that is a flight to safety in your Mag 7. Apple 278. And quite frankly, I think that's the only safety in the Mag 7. Amazon's red. Google can't make that big of a move because Google has earnings today. So we're going to see what happens with Google. And then Microsoft barely green, and Tesla. Yeah, Microsoft red again, 409. I mean, it looks like they want to take Microsoft below 400 at this point. It looks like that's what they want. Where's Enphase? Are we still holding 80 or 50? Enphase still holding 50. Let me know in the chat if you're buying anything, if you're selling anything, if you're raising any cash. If you're saying, screw it, I'm going to take the L on some stuff and just get into cash and wait. It's one of those things where there's two scenarios. We could get a nasty V shape up and everyone, just realizes these prices are really stupid and SoFi goes from 21 to 26 real quick. Or this is the beginning of a elongated, SoFi just lost 21, next few months of pain. Now, remember, for those saying this is what Tom Lee said was happening, Tom Lee said this would happen when we get closer to 7,500. He was not, if you listen very specifically to what he said, he was not saying we get a 20% drawdown from 690. He said we should get to 75, 76, have a 20% drawdown from there, and then get back to those levels. So, I mean, if the 20% drawdown happens from here, then, maybe it still happens. But his argument was we would have more of a euphoric blow off top before a drawdown. I don't think we've had that this year. Like S&P being flat for the year is not really euphoric blow off top. But some of these other names have had euphoric potential blow off tops. And maybe that's where you're going to see the pain start to stem from versus the broader market itself. I ran down 12. That one's still getting hit. Palantir's getting hit. I see people saying I'm selling Adobe, Duolingo, CRM, MicroStrategy, PayPal. All of them are opportunity costs. Can't fully blame you on a bunch of these as well. Buying Rubrik. I cloned Microsoft with Claude in 2 minutes. Yeah. You got to sell Microsoft. You can clone it in 2 minutes. I trimmed some hood. What did Kathy say? Kathy said to sell your gold and buy Bitcoin ASAP. That's what she said yesterday. So Kathy's perspective is, yeah, you got to get into BTC. That's her argument. Robinhood, it's staring down below 80. Palantir staring down below 140 here. Bitcoin's got to be cooked, right? Bitcoin's got to be cooked. Bitcoin 74,329. That's getting hit. Austin, thanks for the super chat. Either Mr. Market is right and all software is dead, or there are some amazing dips to buy right now. I'm on the same page with you. Either all software is officially dead, which again is a little hard to say for some of these companies that are relatively important. Duolingo might not be one of them, but Salesforce definitely is. Either they're dead or they're a great opportunity. Now, again, I've never liked Salesforce in general compared to names like Palantir. So if there is a really ridiculous dip, that would be the one I'd buy before Salesforce. But that doesn't mean Salesforce doesn't deserve to catch a bid, because there's plenty of investors that would see the value in it. And they don't need Palantir type of gains to be in the stock. And even if those guys aren't coming into Salesforce and Adobe, like that's the thing. Like there's a certain subsector of the investing community that only buys Coca-Cola, for example. I'm not saying Salesforce is Coca-Cola level of value, but like it's definitely in the ballpark of what many investors would like to buy and hold and not even think twice about it. If they're not coming in to give this thing a bid, even they must be thinking maybe there's better opportunities than this, which is why things are even uglier for the SaaS names. Netflix, last time we saw 79. When was it? It was November 24. It's been over a year since we've seen Netflix at $79. Do we have services PMI? We do have services PMI. Let me pull that up. Okay, let's pull up the S&P, see if we react to that. S&P officially red on the day, down about 0.33%. Services PMI 53.8 versus 54.4. That's a miss. Prices paid 66 versus 64. That's up. Employment 50.3 versus 50.2. That's a miss. Services new orders 53.1 versus 55. That's a miss. It looks like we missed across the board on ISM. And you're seeing the S&P continue to have that red candle right there on services PMI. I don't know if the market's going to react that much to it. I mean, there are slight misses. Some of them are a little bit more aggressive, but the market was already going down. So this one doesn't necessarily help with that situation. Here's an update on Bascent as well, and then we'll keep going from there.
Idea of regulation by reflex, as he calls it. He is expected to say that rather than preempting crises, regulators have frequently reacted to them after the fact. He calls that, quote, hazmat cleanup instead of preventing dangerous spillovers in the first place. Secretary Bessent, who will be speaking with the House Financial Services Committee shortly, is saying this regulation by reflex has undermined safety and soundness and driven excessive regulation that could lead to economic stagnation. He's expected expected to say, quote, under President Biden, the bank regulators preoccupied themselves with reputation risk, climate-related financial risks, and other risks with no clear nexus to safety and soundness. He is expected to say federal agencies should avoid the temptation to create a zero risk financial system. So we will be zoning in on those statements as well as the Q&A to follow with Congress, which should focus on more specifics surrounding the deregulatory priorities as well as perhaps Fed independence and other key topics that is front and center across Congress and beyond, guys.
Okay, Leslie. Thank you. Leslie Picker. I will take you to the testimony and the Q&A as soon as it begins. In the meantime, guys, the big economic report that we got is the ADP, private sector read on jobs, because it doesn't look like we're going to get the official jobs report, even though the government is open. We're waiting to see for when they reschedule that, presumably next week. So we look to ADP, even though it's not exactly correlated with the government report, it does tell us some things, which is not so hot momentum on the job hiring front for the month of January. Total payrolls coming in at 22,000. Expectation was more than double for that. And if you look at where the jobs were added, a lot of them in services and not so much in the cyclical areas of the economy.
Market's still getting hit. You're trying to find a little bit of a bounce right there. You see that green on the S&P, 686 to 687. Tesla officially goes red. Hoodie's fighting for its life to stay above 80. I mean, she is fighting for her life to stay above $80. CoreWeave down 3, Iran down 12, Nebius down 8, Reddit down 9, Duolingo down 6, ServiceNow down 3, Zeta down 7, AMD down 14. This is a bit excessive for AMD, given NVIDIA is down 2. Now, again, 176. Keep an eye on 170. If NVIDIA doesn't lose 176 over the next couple of days, I think that's really bullish. But if we do lose that, then look out below. So hopefully we can stay above that. AMD is just, lost $35 in the past 30 minutes. Why do you guys think AMD is falling? We'll have Jose on a little bit to talk about it. I kind of think, dare I say it, it's the OpenAI stuff. Because I don't see the numbers giving me a big enough reason to get upset at the earnings. I don't think anyone can say the numbers justify a 15% drop. Is it the OpenAI deal? Is it the street thinking that OpenAI is not really going to come through? Or if they do come through, it's not going to be at the level at which they think that's going to come through? Again, Lisa Su is ready to give up 10% of her company to OpenAI at some point in the future. It's a hell of a commitment. And maybe the street's just calling BS on this. Or maybe it's street expected a better beat, but they did beat. It's not like it was a bad earnings. And I can understand 5% down. 15% is just like, okay, people are not feeling AMD right now. Micron, that's down 3. SanDisk down 7. Is this happening because of the new Fed chair? Well, that's part of what started it for sure on Friday. I haven't fully done a deep dive into Kevin Warsh. I'm trying to go deeper into him. I don't think he's as hawkish as people think he is. He does believe in lowering rates. So, I mean, he shouldn't be the worst guy in the world as the Fed chair, but he definitely didn't make the market too excited. Rick Reeder, I think, would have pumped these markets. I really don't get why Trump picked him. Like, you got Rick Reeder, who was ready to lower rates, get the housing market. You have so much of a dovish attitude from, and then you have a relatively hawkish perspective on quantitative easing, which is not good for the markets on Warsh, even if he's ready to lower rates. So I don't think he's that hawkish, but he's definitely more hawkish compared to Reeder, which is making you, or Hassett. So it's begging the question, why the hell did Trump pick this guy? Like, what exactly does he see in him? The Dixie, by the way, up a little bit, 97.50 on the dollar. Hood below 80. Did we do it? Did we lose it? Robinhood. There she goes. 79.93. Oh my gosh. That is getting hit. That is getting hit. 79.87, 8% down on Hoodie. Palantir as well. 10% down. Let's see if she bounces off 79 or if now that she's losing this level, it's just all downhill. This one, again, I still don't fully understand. I talked to a lot of people yesterday, wrote up a big post on Twitter, had a lot of different conversations with folks. I mean, people are in the same boat as me of just, yes, it probably can get corrected, but this type of a correction is a bit aggressive, especially if you're pegging it just to crypto. Now, they have earnings coming up. I wonder how good the earnings are going to be. Like, I think the earnings are going to be pretty good. But if they're not, how does this play out? SoFi right there at 21 on the day as well. I don't think tax season is the reason for the sell-off either. Sure, people are selling for taxes, but I don't think that's enough for this type of a drawdown, especially not in early February. Where's Fluence? FLNC. That stock was at 33. Now it's at 29. Bloom Energy, that stock down 9%. T Energy, that's down 7%. All of your high beta names are starting to see some pain. Now, if you bought them in January, then you like January 1st, you're maybe not feeling it. But if you bought them in the past 2 weeks, you are absolutely feeling it as these names are getting hit pretty aggressively. This is now not just high beta is insulated from it, because for the past couple of weeks, it was like large caps are down, but like Bloom Energy's up. Now it's like, no, Bloom Energy is also down. Now, still up a lot for the year. But if you bought it in the past couple of days, you're down pretty heavy. UBS also down 5% on the day. Again, I think the biggest reason people are confused about this is because there's not a fundamental reason outside of SaaS being dead for the sell-off. One could argue the hyper extended valuations on high beta was the top, at least in the short term, to cause a drawdown, even if AMD doesn't deserve to be down 14%. If everything's just getting liquidated, then AMD is going to get hit as well. But that also means, again, a lot of these names don't have to stay at these levels at all, if the only reason they're going down is because we had high beta momentum. Like what? NVIDIA is going to go to 140, 150 because Rocket Lab got bid up to $99. Is the market just going to ignore everything NVIDIA? Again, we need a structural paradigmatic change in how the market, which is in 2022, rate hikes. That was it. That's all you needed to get the market to be like, yeah, we're screwed. I don't think we have had that type of structural cataclysmic reorientation in the market. And I think the AI bubble narrative is one of those. But again, the earnings are really good. The SaaS thing is the closest thing we've got into that mindset of like, oh, everything's screwed. SaaS has to be the thing that, changes the entire dynamics of the stock market, which maybe it is. But I don't think that's enough to be that paradigmatic shift. And then, maybe Kevin Warsh's nomination, but at the end of the day, he's still going to lower rates. So what exactly is it? Also, for the people just saying stop hitting on Rocket Lab, first of all, this is the problem with retail right now. If saying that something's a little expensive when it trades at 100 times sales, which by the way, I've said about Palantir for the past year and a half, before you say, oh, well, what about Palantir? I've said Palantir is expensive for the past 2 years of this. Since it was $50, I've said it's expensive. If saying Rocket Lab's kind of expensive at 99 because it trades at 90 times sales, and that's hate, that is why we deserve a little bit of a flush out. And by the way, Erwin, who maybe he's in the chat, he's one of the biggest Rocket Lab bulls I know. He's basically full port Rocket Lab. He's been in the stock since $7. He's OG Palantir as well. He was with me at the meetup. I mean, even he was like, dude, I'm selling covered calls on this shit because there's no way in hell this stuff is sustainable. He still loves it. He's long-term bullish, but he's selling some pretty juicy calls to collect premium because he knows some of these valuations get aggressive. So I don't know. You can't say that someone's hating on a name because they're saying the valuation's up there because you think that trading at 100 times sales is cheap. You can justify to yourself why you're not going to sell that stock. But to say that's hate, I mean, that's just over cockiness and arrogance that retail has had over the past couple of years because it's been a massive bull market. And that's fine, but it's also like you can't cloud the judgment to an extent where you say, well, everything's just hate when you bring up the valuation. Because obviously the valuation is mattering now across the entire market as we're seeing multiples get compressed. And that's why you're seeing a lot of names get hit, right? Your Unity's down 7% on this app loving headline. Grab's down 1%. UBS is down 5%. Uber's down 6%. Ondas, I know you guys love this one, but it trades at 130 times sales. This one's from 14 to 10 over the past 2 weeks. Can go right back to 14 if they get some major contract order. But again, like, these names are also getting hit. People have to separate their company with the valuation 100%. And I feel like I've tried to do that with Palantir for a long time. Like, I love the company. I love the mission. When I'm averaging up on Palantir, I'm averaging up because I bought this thing at $6. It's a bit different than buying it at $190 for the first time. And I want to own more of the company, while at the same time acknowledging the valuation's aggressive. I don't think I bought Palantir at all for the past year and a half, while also not saying, yeah, I know it's expensive, but I still want to buy it. As long as you can say that calmly and rationally, I think that's okay. But if you're like, no, something trading at 300 times sales is cheap, it's like, okay, well, what type of part of capitalism are we in at that point? Because that just sounds toppy to me. TTD, this one continues to get hit as that's down 2%. Joby's getting hit because they did an offering last week. Also, Joby is in that high beta bucket. Same thing with Archer as well. Archer down about 2.29%. VIX is still spiking. VIX is up 3% on the day, which is actually not even that much. But you do have a spike right here across the market. S&P. Has Vlad said anything publicly? Well, S&P's at 69. Vlad was on the Full Send podcast yesterday. I don't know if people loved him being on a sort of like frat boy podcast during the midst of this drawdown, but nonetheless, he was on it. This is a clip from it. I mean, look, at the end of the day, this company works hard as hell and the employees work hard as hell, but they also can't fully control the stock price.
Achieving really hard things is not easy on people. It's tough. It requires long hours. It requires like a lot of attention to detail. So yeah, I don't think Robinhood is like a great place to optimize for work-life balance by any means. It's a place where people come to work intensely and they want to have a lot of impact, and they want to do in 1 year what would take a normal company 10 to 20 years.
They work their asses off. I know a lot of the employees at Robinhood, they are continuing to work their asses off, and they will work their asses off all year and ship a ton of new products. It's just stock market's compressing multiples, and that is the reality of what's playing out right here. Do you think a lot of this is margin? Okay, let's talk about that. Yes, I do think the leverage in the system via margin, which, look, unsolicited opinion that I have on margin, I think you got to reduce exposure if you're in it. I think you got to either get out of margin or reduce some exposure. You got to get to the point where even if you have to take a loss on certain position, which I know sucks because this might be the bottom. This might literally be the bottom. You sell, you take a loss, you get out of margin, then we V-shape, and you're going to feel like shit. So it is a personal decision that everyone has to make. And obviously no one can make it for you. But if this is not the bottom, then it's only going to get worse if you're in margin. So yeah, I there is an outsized level of FINRA margin. We know that's the case. It's about 1.4 trillion. It's the highest ever in history. I mean, with the carnage in SaaS affecting everything else, you're seeing that FINRA margin depth, 1.26 trillion, still the highest in history, but you can see the increase right there from the lows of 2023. It was at 899 billion a year ago. That is probably affecting a lot of other stocks, and that's obviously affecting people that are buying this stuff on margin. And so the only thing you can do right now is de-lever, which compounds into more selling. Eventually we get a bottom. It's just, if the bottom on, like, I don't know, let's say you levered up on Salesforce. If the bottom on Salesforce is 165, I'm just making that up, and you're in at 220 on leverage, and it's at 189, you've got another 20% to go down, like, you're going to get a margin call. It's not going to be fun. Or you're going to have to sell something else to keep that position. So it's just, yeah, I do agree. Like, that is an issue here. But it's only an issue because the market's down. I don't think margin in general is an issue. The margin becomes an issue when the market collapses and people have to sell and de-lever. And unfortunately, that's what we're seeing right now. Now, it's weird because the S&P is barely down, right? The S&P is flat for the year, but it's just everything else is corrected and people were levered up not on the S&P, but on everything else. And that's why we're seeing it. Lemonade, LMND, that's down 9%. Yeah, this thing was at 95 2 weeks ago. Now it's at 75, right? I mean, it's completely getting decimated. Palantir at 141. But I don't think it's Lemonade specific. I don't think this is Palantir specific. I don't think this is AppLovin specific. This is like the entire ecosystem of high growth stocks, especially if they're in certain sectors that could be seen as a threat from AI. Like AI should be a tailwind to Lemonade, if anything. The entire thesis for insurance that I've heard from the Lemonade bulls is AI as the catalyst. So the fact that that's being sold off, I think that's just mass market sell-off. Now, my gut tells me we're a little bit closer to the bottom than not. I hesitate to even say that because, you know, how do you know what's the bottom? But these names have taken some pretty ugly corrections. And you would imagine at some point the selling stops unless we are entering into a 3-4 month prolonged downturn, which basically happened last year. February was the decline. And then until the mid-April, we did not V-shape. And it culminated into the climax of the S&P 500 being down at 4860, down 30% from the top. But that had a catalyst. It had Liberation Day. This doesn't feel like there is a catalyst. So I hesitate to say we're close to a bottom, but I also want to acknowledge there hasn't been a catalyst for any of this other than this whole SaaS being dead argument, which if that's enough to kill the markets, then I guess that's enough to kill the markets. So yeah, I have absolutely no clue when the bottom is. But if we do end up getting a real catalyst to take the markets down, then we're probably going a lot lower. Question is, what is that catalyst? I don't think it's Iran, by the way. A lot of people have been asking about that. It doesn't seem like that's that big of a deal. Oil prices are up a little bit on the day. I don't think oil prices spiking are that big of a deal. Openai is as good of a reason as I can give you also for some of this carnage, just the hesitancy the street has around that company and the spending commitments they have. And then obviously the SaaS sell-off has really been prompted by Anthropic more than anything, which could be taking place. Where's the Dow? Where's the Dow Jones? Dow Jones. Yeah, you know, honestly, the reason the Dow is up is because the Dow's got a lot of boring names in it. Walmart, Caterpillar, etc. The S&P and the Qs have the tech names. And that's the difference. As these continue to get hit right here. The weird part of the SaaS meltdown is just how contained it is. Like the idea that if these companies are all screwed, that it wouldn't affect the entire market. Yeah, I mean, that's also fair, right? Because it's like if all the SaaS companies are going to zero, theoretically, I mean, Salesforce spends a lot of money in a lot of parts of the economy because Salesforce makes a lot of revenue. Like they get 40 billion in revenue and they employ a lot of people. They spend on a lot of vendors, distributors, etc. So yeah, if Salesforce were to collapse, which again, I don't think is going to happen, but let's say it does, like that would affect the broader economy. And so the fact that the S&P is not getting hit on that and it's so contained to the SaaS sector, yeah, I agree that it makes you think it's all fake. If it was actually a SaaS carnage and not just an algo SaaS carnage, one would say, well, the entire market is screwed at that point. It's not just SaaS. But it seems contained to SaaS. Tesla right there, 415. As that one continues to go down. Nike is up 4%. Iran has earnings on Thursday, right? Not today. I don't think Iran has earnings. Yeah, Iran is tomorrow. Amazon, MicroStrategy, Reddit, Roblox, Fortinet, Affirm, CleanSpark, Bloom Energy, and Iran are tomorrow. Today is Snapchat, Elf, ARM, Google, Qualcomm, Symbotic, Wolfspeed, and Fluence. Money market update. We're going to get the updates tomorrow, but last week they increased to 13 billion. So you had 2 weeks of declines, and then you had an increase of about 13 billion here. Let's get a little bit more update on the job stuff, then we'll keep going from there.
Economy was in healthcare and education. That continues to be the job growers. We did see leisure and hospitality add, which is good. The goods producing sectors only added 1,000 jobs. So kind of a weak showing. If you smooth it out, 3-month average, moving average is now 10,000 jobs from 18,000 prior. So loss of momentum. on the hiring front, and because I know you guys have been focused on this issue, manufacturing was a job loser again. And we've seen that now several months in a row. We haven't seen manufacturing add jobs in the ADP report since 2024, despite all the tariffs and the investment announcements from companies that they were going to build in America.
Yeah, page 1 of the Journal today, U.S. manufacturing in retreat is how they put it, and they have charts of manufacturing construction, manufacturing employment, manufacturing job openings. David asked Hassett the other day on this show, what's taking so long? And Hassett's answer was essentially they haven't turned the machines on yet.
Yeah, right. They're still breaking ground, so to speak. And
Let's hear from Stacy from Bernstein and his thoughts on this AMD earnings.
Servers, we're in a server cycle now, but I do think expectations were maybe for even more. Even with, as Lisa said, it's going to grow in Q and usually be down. But even with that, I think people were expecting more. And then on the AI side, they had upside, but a lot of it was from incremental sales into China, given some of the easing of the regulatory, which was not in numbers. And so if you take that out, there wasn't a lot of near-term AI upside, which I think people have been looking for. You didn't quite get that. And I would say the OpEx, the spending keeps going up. And I'm not knocking them for spending. I understand why, but at the same time, they don't seem to have any control. They're giving a number, blowing past it, and then guiding higher. And it's really limiting the EPS leverage. So even with a revenue guide that was decently above the street, the EPS guide was almost in line. And so you kind of take all of that in the context of very high expectations. And the idea that it really is a waiting game, because we're actually waiting. The big ramp on AI is coming from Openai, which is at the end of the year, and it's only January. I guess that's why it's down. Although I will say the magnitude today is surprising me a little bit.
yeah, well, when we talk,
Even Stacy, he's acknowledging, it could have been better, but the magnitude of the drawdown to him, I imagine Jose will feel the same when he comes on. AMD down 14 is the issue. And that's the pain that you are seeing. Basent says we must avoid temptation of zero risk financial system. We'll probably get a lot more quotes from Basent soon. Adobe, just went green. Adobe just went green. ServiceNow just went green. Wow. I wonder what that is. And I wonder if that's the entire market about to flip right there. ServiceNow and Adobe just flipped green, completely broke their downtrend, literally at the same time. What about Salesforce? Salesforce has a green candle. Stock market's fake. It's all fake. There you go. Algo's coming in. 1025 algos. Maybe it's a dead cat bounce. Can Palantir reverse a 10%? You see Palantir's little green trying to bounce as well. That's hilarious. Zeta, look at that green right there as well. 1630 to 1722. The stock market is so fake, bro. It is so fake. I mean, it's going to obviously be not even real, but it's just funny to see at the same time the algos decide, there you go, Salesforce. At the same time, the algos decide, boom, let's send it up. I mean, that's actually hilarious. Netflix, that goes green as well. Software stocks now underperforming the NASDAQ by the largest margin this century. Wow. As they continue to get hit. Duolingo goes green. It could be shorts covering. That's fair. Although the shorts will be making some good profits right there. Duolingo goes green. It's hilarious, dude. And we get to see this in real time. We see them go down in real time, and then we see them recover in real time. Now, again, I don't know if these will actually recover for the day, but it's hilarious to see the candle. Salesforce is up, Atlassian's up, Adobe's up, ServiceNow up, Cloudflare up, Intuit up, Twilio's up. AMD getting a bounce. AMD was down it's a very small bounce, $2. But yeah, there is a little bit of green. Amit, do you trust the green? I have no idea. Does anyone trust Adobe, Salesforce, and ServiceNow going green right now? I mean, again, they're green by like 0.5%. I don't own these names. I don't want to buy these names. I just want to see, is this algo green 1025 move up enough to change the entire market today? Or is it just the algos trapping people. Broadcom's down 2, 313. Palantir at 141 to 144. Still not green for the day. Duolingo just went green. As that one continues to get hit. Did you buy the SoFi dip? Yes, I bought it on Friday. I have not bought it since then. But I bought it on Friday. I don't know, dude. I don't think SoFi deserves to be at these levels. Maybe the street's pissed off about the dilution as well, but that's old news. JP Morgan upgraded SoFi. JP Morgan, out of all places, upgraded them to $31 yesterday. All the analysts, by the way, are still defending their hood call. I mean, multiple of them came out yesterday and said, we still think this thing should be worth 130, and we think the sell-off's overdone. Question is if the street complies with that. Intuit, did that go green? It could be a liquidity grab right now. That's fair. Especially because there's no headline to reverse the trend. Intuit just went green as well. Yeah, pretty much every SaaS name. If you weren't down more than 4 or 5%, you reversed green. And the ones that were down like 1 or 2%, they are going green. Oracle, huge bounce as well. Yeah, 146 to 151, still red on the day. Makes you think there's a headline, but I don't see anything for this headline. Like the market's acting like all these SaaS names could just be vibe coded. And it's like, dude, you can't vibe code Palantir. Like, I don't think you can vibe code Salesforce. Maybe there's certain elements of it that in the stat, but like, I just like the idea that you can get into a Fortune 500 company and vibe code some open source project for that. It's like, it's kind of laughable. You can't vibe code Microsoft. Microsoft 417. Okay, this one was at 408 this morning. Microsoft, one of the biggest names in SaaS. Yeah, how do you vibe code cybersecurity, right? Like, and it's one of those things where it's like, same thing with gold and silver. It's like, which by the way are losing not a lot of their steam, but I mean, well, silver. Gold was up 2%, now it's up 1.5. Silver was pushing 93, now it's at 88. It's like gold and silver going up like crazy, then going down like crazy, then the market's selling off SaaS for Anthropic headlines. It's just like, it feels like everything is so emotionally charged back and forth, and there's no real structure or cohesion to the market. And I know there's not ever a structure or cohesion, but a lot of this stuff just feels ridiculous. Like, absolutely ridiculous when you really sit and think about it. And it's resulting in some of these prices that maybe are going to be ridiculous. Red Cat, that's down 7%. So your drone stocks, that is getting hit as well. Red Cat down 7.2%. Google down 1%. Yeah, it's going to be hard to vibe code Zeta's first party data. I mean, like some of this stuff is just... Also, it's funny because it's like, dude, yes, Anthropic deserves all the praise in the world, and we've been covering them for a couple weeks now. But I don't even think Anthropic has enough compute, much less the models being good enough to just rebuild all these other SaaS products and then go into the enterprise and say, hey, take out Salesforce that you've had for the past 20 years and put in our new thing. Like, I don't think that's happening tomorrow. And the market is acting like it is, which is a little bit of the confusing part here. Let's go to Besant. Let's see if he's saying anything, and then we'll keep going from there.
If we want more housing supply, we find that it's really that local grassroots, public or privately held community bank that helps lead that. You mentioned de novos, and under Chairman Barr's leadership in our subcommittee, and on again.
Okay, I'll go back to this. We got Shyam Sankar on Fox from Palantir. Let's go to this real quick, and then we'll get back to Besant.
Around the world. There is a second part that I think is equally important and often elided, which is that combat power comes from the factory floor. One of the lessons of Ukraine is it turns out the stockpile is not the deterrent, it's your ability to generate the stockpile. So modernizing not only the defense industrial base, but the American industrial base so that we can make more weapons more quickly, we can sustain combat power, and we can use that to deter our adversaries.
Palantir reported strong fourth quarter earnings. That report came out on Monday, a 70% revenue jump. Now look forward for us, would you? What's your outlook for the next quarter?
Well, we've issued guidance, you know, as the CTA, I don't have all these numbers at the top of my head, but for on a full year basis, we've issued guidance for 61% growth, again, off a pretty substantial base. We continue to see enormous strength in the U.S. overall, which I think speaks to a cultural disposition of rolling up our sleeves, getting busy. The military is obviously quite serious about modernizing itself, but so is the U.S. commercial sector right now.
It's really strong stuff. Shom Sankar, thank you very much for joining us this morning. That was really illuminating.
All right, that was Sham. Let's go back to Besant.
It was an important act, important piece of legislation.
This is Waters of California for 5 minutes per question. Housing in the committee, also on a bipartisan basis, speed up and makers creation of the Genius Act.
United States a national champion. The Genius Act and the stable coins that will be created with that could in fact be an important feature of financing the U.S. government. And we are moving with deliberate speed to round out the House and the Senate's intention on that important,
Thank you very much, Mr. Secretary.
piece of legislation.
Appreciate your work and leadership there.
All right, so Besant's saying we're still focused on the Clarity Act. Google down 2% now. ServiceNow goes red. Salesforce goes red. Adobe holding on, but that little bounce here right back down to 142. You can't trust anything here. You cannot trust anything. They have violated our trust. I think they're loyal to the green. They keep cheating with the red. Adobe's actually holding it, though. Adobe's like legit holding it. 264 to 276. The others, though. Intuit, is that still holding it? Intuit's holding it a little, but there's that red candle starting. What was the other one? Atlassian, there's that red candle right there at 107 starting. Oracle, there's your red candle. They all move with each other, man. I wouldn't be surprised if Adobe gets a red candle. We don't see it yet, but pretty much all of them going right back down or starting to go right back down. CrowdStrike, this thing was 550 a while ago. 415 on Crowd. SanDisk down 12%. Memory names. I mean, again, this thing is up freaking 17x over the past year. Not crazy for it to take a breather. Micron, wow, Micron 8% down. 7%. All right, if you bought memory past 2 days, you are now holding a bag. Both were, like Micron was 450, SanDisk was 725. Both of those getting hit. Meta entire earnings move now has been given up. Meta back to 679. Meta back to 679. Bitcoin, did we lose 74? We're really close to losing 74. Iran, 46.79, down 14%. Bloodbath. Absolute bloodbath. But again, some of these names are super, super high beta, and it's like, you know, Iran could go back to 60 tomorrow if something really good about data centers happened, but you got to be able to stomach the volatility in some of the names. Distressed software loans swell by 18 billion in the span of weeks. More than 17 billion of U.S. tech company loans in the Bloomberg index dropped to distressed trading levels during the past 4 weeks. Among those that fell into the distressed territory amid the SaaS-copocalypse, as it's being dubbed, and debt in healthcare software firms are loans held by different private equity companies. A sell-off in software debt has pushed billions of dollars into distressed territory. Wow. So the credit markets are selling off the bonds of Salesforce, Adobe, ServiceNow, etc. All those companies have debt. It's minimal, but they do have debt. And you're seeing some distressed loans at this point because of that. So it's not just the equity people. It's the credit market saying we don't want to be associated with ServiceNow's debt. Is this bad for private credit? Yeah, this is not This is not the best thing for the private credit markets. A little ugly. Let's get someone on the show who can help us explain maybe a little bit more about some of this AMD sell-off. Ladies and gentlemen, Jose, how you doing, man?
What's going on? Good morning. Good morning. I wish I can explain a lot of what's happening here, but I don't know. It's a crazy day today.
It's a crazy day. SAS is being sold off. I would love to get your opinion on that as well in a little bit. But let's just start off with AMD. I mean, they put up some pretty damn good numbers, in my opinion. Why do you think the street is not happy?
Yeah, I mean, I agree. I think everything was strong. I mean, they beat on earnings, they beat on revenue, and they beat on guidance. Now, they did have a few added revenue from China. And if you kind of take that away, they still beat, but it wasn't as crazy. So that could be one of the reasons the pullback happened. The other reason is after having all these memory companies reporting earnings, right? After you had all these memory, and it's like all of them are up crazy amount. I think you put sometimes the market puts everything together. Hey, if memory is doing this, then AMD must be doing this, but completely different markets. And for AMD, the AI story is not till the second half of 2026 when they release that MI450, right? That's when the AI story is coming for AMD. So I don't know if the market was just for some reason expecting some magic to come out this quarter. If you're a short-term investor, obviously it sucks. I think for long-term investors, you got a lot of clarity. They were coming into the earnings. You had rumors that the MI450 was delayed. AMD kind of says they're happy, they're on track with that. They're going to release it in the second half. So you got removed with that noise. Coming into the print, you also were expecting growth in the CPU space. The CPU space is still, they mentioned their server CPU is doing really well. The consumer CPU is also seeing strength. So you got some clarity there. And I think you also got some clarity on the China market. They said that they were shipping the MI308 and they were getting licenses for the MI325, which was not included in guidance. So I think for long-term investors, the story is still there. For short-term investors that were maybe expecting a Micron type results or SanDisk type results, you're not going to get that from AMD. And it's going to be like that, I would say, for the next 2 quarters until we get to that second half of this year.
Was there any red flags in the call that you can identify?
I don't know. I wouldn't red flags. Maybe I wouldn't put it a red flag, but you do see a bit of a sequential decrease from quarter 4 to quarter 1, which is typical, right? It's typical for AMD since they are in the consumer space. You tend to have higher orders in quarter 4 due to like the holiday seasons and all that, and then quarter 1 tends to slow down. But since you expect this to now be an AI company, you don't want that story to continue. So I guess the cycle, even though guidance was a beat, it's still a sequential drop. Outside of that, I don't think there was much of a red flag for a long-term investor. I mean, the risk that comes with here is this is going to be the first time they're going to release the MI450, which is going to be a rack scale system. This is the first time they're going to do a rack scale system. And that you need an understanding of the supply chain. You need big partners. You need to make sure they execute correctly as well. So supply chain doing something for the first time and doing flawlessly is I would consider more of a yellow flag, right? It's not impossible, but doing it for the first time, you have to be extremely careful.
Okay, let's talk about the growth rates. By the way, Trump just tweeted about China. The summary of the tweet is that he had a good call with Xi. He's going to China in April, and China is considering to buy 20 million tons of soybeans. So you got Trump putting out that China tweet. Maybe it'll help the markets, maybe not. But you're seeing a little bit of a green candle here. S&P just went green as we have this new Trump-China tweet. So, Jose, do you think the street needed a bigger beat from AMD? Because the headline that I got was that AMD did well, but investors wanted something bigger. They wanted like an NVIDIA 4 billion type of a beat. Is that what you think they needed to do? And if they, and transitioning to NVIDIA, if NVIDIA doesn't do that, do you think NVIDIA also can take a 15% hit?
So first with AMD, I think the market wants that. but again, it's like I don't know why they're getting these numbers. If you follow this company, I mean, if you listen to the Carney's call, you shouldn't be expecting that quarter 1 or quarter 2. Like, there's no reason. It's not like they have a product that's going to magically appear that's going to give you those types of results. So maybe the street is expecting that, but realistically, that's not going to happen. 99.9% sure that that's not going to happen unless something amazing happens and CPU becomes the new shortage or something, right? Like, unless that happens within the next 2 quarters, you're not going to see them to the second half. And yes, I believe the market would have liked that, and that's one of the reasons for the sell-off. Now, for NVIDIA, I mean, NVIDIA is extremely cheap right now. One of the things is AMD coming into this print had a forward PE ratio of about 42, right? Where AMD, NVIDIA, if it's coming in right now in the print, is coming with a forward PE valuation of like 27. So I don't think they need to showcase those crazy returns, but they are, and NVIDIA is going to be and raise on all things. They're going to come with a triple beat as well.
Data center growth for AMD. So the China stuff I think you're talking about is really important. The MI308, I believe, was $400 million worth of revenue in Q4, and they're guiding for it to be $100 million in Q1. Do you think the lack of China revenue, or there's too much China revenue, is also creating some, like, how do you kind of resolve that headline?
I think the market is reading it wrong, right? So AMD guided, they barely guide revenue from China. They didn't guide it last time because it's so uncertain. And I think the only reason they guided $100 million this quarter was because this is an order that we're already a month into this quarter. So either that order already went in, so they can guaranteed put that in the guidance, or this order is going to ship out pretty soon. That doesn't mean that's the top. That's just all that they feel extremely comfortable giving, because it's either gone out or it's going out in the next few weeks. Right. They mentioned that there's potential for more MI308, but they're not including it in guidance. And they did submit the license for the MI325 to be sent out to China, which is kind of like the H200 variant that NVIDIA is going to be able to send out. I think Street is just looking at it as 100 million is all you're going to get from China. I think that's not the story. I think 100 is the minimum they're going to get. There's no ceiling just yet, depending on the licenses. So that can actually be still a nice tailwind, where the Street probably thinks it's no longer worth.
What is your take on this SaaS sell-off? And do you think AI is going to commoditize all these companies?
Yeah, it's so funny. It's like the market doesn't know what to pick. It's either an AI bubble and AI infrastructures are going to go down, and all AI infrastructure is down today, or AI is going to be a thing and AI is going to eat up the software. You have all these software stocks down. So the market believes one thing, that AI is going to kill something. It's either going to kill itself or it's going to kill software. I think either of those are true. I think companies, at least big AI companies that have a lot of data, are going to be big winners with the AI space. So I do think the software market is a bit of a sell-off and an opportunity. I don't focus too much in that market. The only ones I can really talk about would probably be like Synopsys and Cadence. Those are software companies, but they focus in the semiconductor space. And those are also trading down with the software market. I think Synopsys yesterday was down like 8% and Cadence was down like 5%. If I was to start looking at software names, that's where I would first look into, because they have a lot of data of how their customers use their products. They have a lot of ways to integrate AI to make them even better. And then they will be able to upsell some type of product with that AI solution. And I'm pretty sure, again, I'm just talking about it with Synopsys and Cadence, I think most software companies will have that same type of story. But the theme is AI is going to kill. And we have rumors that Anthropic and GPT and Openai are going to be releasing their models today, some new models today. So if they do release these models today and you see some more software killing thesis, that could continue the pressure there.
So you don't really think it's happening, but you think the market's reacting to it as if it is, which is confusing, because if AI is a bubble, then how could AI kill like $1 trillion worth of industry, essentially?
Exactly. Yeah, I don't think it's happened, but I think the market, this year, this year and last year have shown me that even if the company is still well, the market still needs to believe it, right? If the market doesn't believe it, so investing is crazy because you not only need to be right, but the market also needs to think that you're right. And if the market doesn't think you're right, your stocks are gonna suck. So right now, even though we've seen improvements in Adobe, I don't follow ServiceNow, but I'm pretty sure ServiceNow has seen improvement. Even though the business and the fundamentals show that it's right, the market still doesn't believe it, and that's why you're kind of seeing that pressure on these software names.
China said, we are willing to do more good, big things for U.S.-China relations from China State Media. Again, Trump said that he had a really good call with Xi as well. Jose, I want to get your take on what's going on with OpenAI and Jensen. You've watched every Jensen interview over the past 5 years. By the way, Jose's YouTube, I'm linking that in the chat. Please make sure to follow him. He goes live at 11 every day, talks about stocks and semiconductor stocks in particular, so you can ask him a lot of your questions in that stream. Do you think Jensen is trying to be politically correct about OpenAI, and do you actually think he really does not like Sam Altman anymore?
I don't think I think I did it in a previous episode. I think this is just celebrity drama in the stock market, right? If you talk about AI, if you're thinking about AI, who are the biggest celebrities? You would have to say Jensen and OpenAI and Sam. Maybe you can put some other players, but I think everybody, when you think of AI, you might put Elon in that list. But regardless, media wants clicks. And you have these random anonymous sources that's saying something happened, and it creates this negative sentiment of, oh, look, now Jensen hates OpenAI. Now OpenAI is trying to find all these other aspects. I think it's false. I think it's just media click. I think Jensen has too much on his plate to be worrying about a company he barely owns. Maybe he's going to invest $20 billion, is the reported rumor now. But he has enough on his plate to be worrying about another CEO. Right. For NVIDIA, he has plenty of customers. He has Microsoft, he has Google, he has Claude, he has Amazon, he has CoreWeave. The list goes on. He can't be worrying about everyone's CEO. So I think he doesn't have any anything with the company. There have been a few interviews where he seems aggravated. He's more aggravated at the people asking the questions, because they keep asking him the same question over and over and over again. And even after he answers the question, they kind of re-ask the question in a different way. And it's obviously annoying. So I think it's more just celebrity drama. I don't think there's any real type of tension there.
I agree with you. But I do think he's annoyed that Sam Altman signed that deal with AMD.
Yeah. I think him signing with everybody maybe kind of put some pain in him, but all this is old news, right? I think there was another report that came out after. First, I think the first report was Jensen was bad at OpenAI CEO, or kind of said some bad stuff about OpenAI CEO. That was the first thing that came out on Thursday. Then on Friday, we saw NVIDIA is no longer going to invest $100 billion in OpenAI. They were never going to invest $100 billion at once. It was all going to be in trenches. They said the first one was expected to be in the second half of 2026. So it's not even time yet. But then the market was like, oh, they're not investing a whole $100 billion anymore. That was never the thing.
Well, but Jensen did say we would be delighted to be invited to invest, and we will consider. It's a little weird when he's saying, yeah, we'll consider it. It's like, bro, you just did the whole press conference in September saying you're going to, is that not a little?
I guess I can see it that way. Yeah. I mean, I think we will kind of get the funding round. It should be closing soon, and we'll get those updates. I think we're going to see NVIDIA there. Perfect. In there. And then a few hours after that, we saw that OpenAI is looking at other types of chips instead of NVIDIA. And it's like, OpenAI has been doing this for like the past 7-8 months. They talked to AMD 7 months ago. They talked to Broadcom a few months ago. They talked to Cerebras, I think, was another random startup company that they talked to. It's like, all this is old news. It's not like it's all happening right now. But again, it's media clicks hit. And it's like, what can we pull out to kind of put this to get more eyes on our platform? So there might be some tension, but it's definitely nowhere near the type of tension that the media is talking about.
Are you buying the memory names?
No. I mean, congratulations to everybody running with that, but the memory market scares me. It does. I'm not shorting it. I think it can continue to go up. I mean, we hear everybody selling their sold out for 2026. We hear that customers, it's the first month of the year, and we're already hearing customers for 2027. I think it was Sandisk. I was listening to their earnings call. They mentioned that customers that didn't get stuff today or anytime soon are already making procurements for 2 years from now, for 2028. That is wild. I mean, you have Elon talking that he wants to build a fab just for the memory market as well. You have Intel CEO, I think yesterday, said that memory is going to be the biggest pressure. It's not fixing anytime soon. In a lot of the earnings calls, even companies that you don't think are worried about memory are worried about memory. So it's definitely different than your normal cycle. But it still scares me.
It's different. It's different than normal cycle, but it still scares you because well, here's the problem. Everyone's saying it's a super cycle, and the forward PEs are like below 10. So why wouldn't you buy? Like, what is the thing that still makes you hesitant to?
You know what makes me scared of memory market is, and I think I was on a live show yesterday with Wolf Team. So if you were there, if anybody was there, you might hear a repeat here. But people might go, Jose, wasn't NVIDIA always expensive, right? And NVIDIA saw this massive rally up. What made you hold NVIDIA and not these? And isn't this, you're being a hypocrite. Shouldn't this memory companies be the same? The difference between NVIDIA and these players is NVIDIA, even supply constraint wasn't the issue. That wasn't the bullish thesis. That was never the bullish thesis for NVIDIA, supply constraint. It was part of it, but one of the bullish theses is their gap between competitors was insane. So even with supply pressure, they're going to continue to innovate and they're going to continue to lead in this space. Now, in the memory players, the supply constraint is literally the whole story here.
Right.
The technology mode is SK Hynix, Micron are literally right there. If one of them has a slip up, the other one takes you. It does. Samsung, it has reawakened. And you have HBM4 being really good. Supply constraint is the story, and that story can ride well for investors. Again, this is why I wouldn't short the stock, because supply constraint story can last a long time. But I personally can't put my money knowing that the supply constraint is the only story, because what happens when that doesn't become the story? How are you as an investor going to know before all these players that the supply constraint story is changing so quickly? You're not going to hear until after earnings, and until after earnings, it's too late, right? The stock would have already reacted dramatically, right? It's all other people have better views on the supply chain than most investors. So this can last a long time. I'm not saying it's going to go down tomorrow or this is the beginning of the drop. We hear the supply constraint is going to last a long time, but even for that, it to me, it's just scary because supply constraint to me is not a reason I would want to put my hard-earned money in, right? It just doesn't fit I might be too much of a pansy. I can't stomach that risk.
I'm going to steal that talking point. Now, when everyone asks me about memory, it's like the supply constraint can't be the only reason, baby.
Yeah.
Can't be the only reason. That's a fair point. I think that's a very, very fair point. Are you at all scared a bit about NVIDIA and the broader sector? Or do you think the earnings growth is there, the thesis is there, the AI commoditizing SaaS only means you're going to need more GPUs? Or do you have any little hiccups in the broader thesis right now?
No, the market has been selling off like a nice amount, and I really haven't been that worried because I've been focusing on reading these earnings. I don't know how many earnings calls I'm reading per day right now, but I'm reading these calls, and overall bullish thesis is there for the AI market. I mean, we heard from Meta increasing capex like no tomorrow. We heard from TSMC increasing their compounded annual growth rate of AI chips like no tomorrow. We heard from Microsoft that their cloud growth was throttled by a mixture of they don't have enough supply. They don't have enough GPUs. They had to give some of their GPUs to their first-party solutions, right? They couldn't give all their GPUs to their cloud. If they had more GPUs, they would be able to actually provide good equipment to both sides of their markets. I think that's extremely bullish. I mean, Amazon yesterday, their AWS CEO was just at a Cisco AI Summit, and he mentions that to date, they have yet to retire an A100. An A100 came out over 6 years ago, right? You had the H100, you had the H200, you had the Blackwell 200, you had the Blackwell Ultra releasing now, you have the Revo Rubin coming out in a few months, and you still haven't retired an A100, and you have people trying to scare me off of my AI stock shares because there's some AI bubble. You have the memory companies talking about procurement for the next 2 years. Like, even though I'm not in that investment, I still believe there's that constraint is there. So it's like, it's everything I'm reading is telling me this AI, I don't know, the AI bubble. What AI bubble? What? I don't know. It gets me angry. It gets me angry. People trying to get me out of these AI shares. NVIDIA is going to do great. The AI ecosystem is going to do great. Obviously, there's going to be some companies that might be overexcited and might underperform, but the whole ecosystem within the next 5 years, I think, is still pretty much early.
I think that's a great point. And I think that's also why, as NVIDIA goes below 176, you are still bullish your CoreWeave, Nebius is the world as well.
Yep. Those guys, there's nothing in that I've read from earnings just yet that has told me, you know what, Jose, maybe you're making a mistake. And I don't think it's because I'm covering my ears or eyes. I'm really trying to read. I'm really trying to read the in between the lines. What's the bearish point that I can find to kind of counter argument myself? But any of those points, I don't think make sense to me. They don't.
Jose, thank you for being on the show. I think we all appreciate your analysis of the semiconductor ecosystem right now. I'm putting Jose's YouTube right here in the chat. Please make sure to follow him. I'm putting his Twitter as well. And he goes live every day talking about semiconductor stocks.
And just one more ending point. I might sound like the ultimate AI permabull. I understand stocks go down. I don't expect my stocks to go up every single day, it's a cycle. There could be some cycles where you have some hiccup. You could have some supply chain thing. I think there's always opportunities for stocks to see massive declines. But when I'm investing in my portfolio. I started investing many years ago, and I have not touched that money. That money, I act like it doesn't exist. And that's how I continue to work. It's that money just goes in there. It's not money I need anytime soon. It just has one job 5 years from now to be bigger than it is right now. And I think with the AI story, that job is going to be completed with the money I keep on adding. So it's money. Maybe that's another thing. Money I don't need to see in my account anytime soon. It could just be in my portfolio for the foreseeable future.
I love it. Jose, thank you so much. We appreciate it. And I'll see you today for Google. Jose will be with for Google. All right. Have a good one.
Thank you.
All right, NVIDIA, she's trying to hit her lows of the day right here. 175.66. 176 was important not to lose. We have officially lost it. AMD continues to hit. I mean, AMD is basically going for 205.20. If we lose that, that'll be a new low for the day. Palantir touched 140. S&P still down 0.15. Meta 676. Micron down 8. I think Jose had some really good points on memory. I'm happy for the people that made money in it, but you got to have a stomach to handle what's happening in the memory ecosystem. NVIDIA, let's see. Can she actually go below 175.50 now? I mean, she's teetering and tottering around 175.90. I feel like it either breaks down or it goes up. By the way, Rocket Lab, because I'm the somehow biggest hater in the world around Rocket Lab, it's down 10%. Didn't feel like it was real yesterday going to 81 when everything was going down, no matter how much you love this company. And the day after, it's down 10%. Like a lot of these high beta growth names, again, they are just incredibly volatile. And I don't think you can trust the green on a lot of them right now, especially when the green is unfounded. And yesterday, Rocket Lab had zero reason to go up at 3:50 p.m. Neither did ASTS. ASTS is down 12% right here. Now, they could go back up 10% tomorrow. But the point is, it's just like it's one of those markets where a lot of the high beta names like a Nebius getting hit 9% right here. Nebius also was $100 not too long ago. You really can't trust the green or the red in a lot of these areas. Do you own Ondas? I do not own Ondas. I want to interview the CEO, which hopefully I'll be able to. He's traveling right now, but we did email last week and hopefully he'll be on the show. I do not own this. I don't fully understand the thesis. I want to learn a lot more about it. I'm not opposed to it, but I don't like that it trades at 130 times sales. I feel like that's just a bit aggressive in this environment. Just like I don't like that Rocket Lab trades at freaking 70 times sales. So, I mean, yeah, I don't own the stock, but obviously I do want to learn more about this stuff. It's just in an environment where everything gets hit. If Microsoft gets hit, then yeah, a lot of these other names are going to get hit. I don't own IREN either. I own Nebius, not IREN, but IREN right here down 15% on the day. NVIDIA's going down, folks. There you go. 175.20. All right. Now it's going to get fun. Now it's time to see if I mean, the lowest NVIDIA got to in November was 170, right? I think it like briefly touched 169, literally for a second. So today's going to be important. Are we going back to 170? VIX just hit 19. All right, the VIX is popping higher. Palantir 20 cents away from losing 140. S&P at 687. That's down a third. You own Rocket Lab, right? Yes, I own it, but I'm not buying it here. And I think that's the difference, right? You got a lot of people saying, well, it's cheap at 85. It's like, well, I think the only reason it even got to 85 is because the SpaceX IPO is hyping it up. And that's not being bearish Rocket Lab. Ask Matt if he thinks it absolutely deserves to be 80. It's like, no, but there are many catalysts that can ride momentum, but that momentum, just like crypto was a catalyst for Hood for the past 2 years, applies to the downside, as crypto is a catalyst now to momentum going downwards on Hood. $80.57. Hood's been doing well holding 80. We bounced off 79 pretty quick. I wonder if NVIDIA can bounce off 175. Where is SoFi? SoFi looks like she wants to see 2050. That's down 4. S&P still down a third. CoreWeave's down 2. Nebius lost 81. Exxon is up, Pepsi's up, Lennar is up, UPS, greatest company in history of the stock market, that's up 3.6%. Oh boy, here we go, NVIDIA, 14 cents. Do we lose 175? And now they're just going to take her down to 170. Is that what we're doing? Here's a couple updates on Bessent real quick, and then we'll keep going. Apple is up. A lot of people fled to Apple today for some safety.
Not going to see our tax dollars invested in crypto assets.
Well, why would a private bank be your tax dollars, Congressman?
Excuse me, I'm now asking about the money of our taxpayers, which you manage as Secretary of the Treasury. Is it going to be deployed into crypto assets?
We are retaining seized Bitcoin.
That's not exactly taxpayer money. You collect a lot of taxes this month.
No, that is an asset of the U.S.
It's an asset of the U.S. It was
government.
And are you going to invest any?
And I will point out,
Mr. Secretary, reclaiming my time. Are you going to invest
in the asset seizure? That $1 billion of Bitcoin was seized, 500 million was retained, and that 500 million has become over 15 billion.
Gentleman's time has expired.
Okay. I don't think we got anything too productive from that. NVIDIA loses 175. NVIDIA loses 175. Palantir loses 140. First time since August. First time. No, it's got to be longer than August. 139. Yeah, first time since June. June of last year. June of last year. S&P still not really getting hit too hard. Down a third compared to a lot of the other growth stocks. A bounce here back to 175 for NVIDIA would be nice to see, but it does not look like she's easily going to give you that bounce. 174.61 on NVIDIA. What's driving NVIDIA lower? At this point, I don't have a single headline. It is this broad-based, I think, SaaS sell-off we saw in the morning that's continuing itself into a lot of other sectors. Rotation, I guess, yeah, would be the argument. Cerebras just raised $1 billion at a $23 billion valuation. That is another company in the chip space. Yeah, I would say it's rotation. Look at the stuff that's red on the heat map. Look at the stuff that's green. I don't have an NVIDIA specific headline. That's for sure. Unless you want to say whatever Jensen said about Openai is like bearish, which maybe it is, but I don't know if that's enough to take it down 3%. Feels like it's a bit more of that rotation. Nvidia bounced to 175, but I don't know if she's going to hold. Adobe, by the way, I mean, that's holding. The other software names are not. Look at Adobe, 280. Salesforce and ServiceNow did not have that type of move. Salesforce, at least it's green. And ServiceNow is also slightly green, but Adobe actually is up $8. So if the market wanted a software name to ride back higher, it looks like they're picking Adobe as their name. And then Nvidia, we need some recovery above 175 for this to make a move. Senior Iranian official: discussions with the U.S. and Oman will only be about nuclear. The missile program is off the table. Rubio says talks would have to include ballistic missile discussion. Okay, so the Iranians don't want to talk about missiles. The United States does. China, by the way, said a bunch of things. They said that we want to increase our communication with the United States. We want to keep working with them. However, they also said that Tanner says at this rate, I'll look into entering Palantir. China also said just now, Chinese state media, the exact quote is, the U.S. should deal with Taiwan arms sales issue carefully. The U.S. should deal with Taiwan arms sales issue carefully. I think that's reminding me of when Walter White told Hank to tread lightly. Is that not reminding you of that moment? That if you're going to sell them weapons, you better be a little careful about that. Better be a little careful. But Trump is, we didn't get to talk about this because Jose was on. Trump is pumping the soybeans again. So here's the exact tweet. I have just completed an excellent telephone conversation with President Xi of China. It was a long and thorough call where many important subjects were discussed, including trade, military, the April trip that I'll be making to China, which I very much look forward to. Taiwan, the war between Russia, Ukraine, the current situation with Iran, the purchase of oil and gas by China from the United States, the consideration of China for the purchase of additional agricultural products, including lifting the soybean count to 20 million tons for the current season. They have committed to 25 million tons for the next season. Airplane engine deliveries and numerous other subjects, all very positive. The relationship with China and my personal relationship with Xi is an extremely good one, and we both realize how important it is to keep it that way. I believe that there will be many positive results achieved over the next 3 years of my presidency having to do with President Xi and the People's Republic of China. He didn't mention that Xi told him that if you sell more shit to Taiwan, we're going to screw you up. He forgot to mention that in his tweet. But Chinese state media is letting everyone else know what he actually said about Taiwan. Google down 2%. Nvidia, she can't hold it. She cannot hold it. 174.71. I mean, she tried to bounce at 175, but it's just not there. 174.75 now on Nvidia as we go down on the day. Goodness, man. Palantir, a little bit of bounce above 140. Rocket Lab, we haven't seen below 70. That one's now down 12. AMD's, I mean, at this point, just take her below 200. Go $4 separating that. Meta at 674. Google's down 2. Google has to report on earnings on a day like this, which is not going to be the easiest for them. Starbucks is up today. 96.50. All right. I guess people can drink some coffee while they lose their net worth. That will help. I don't think we're getting any more macro data. I vibe coded a Blackwell chip on my Mac Mini. Oh my gosh. Where's gold and silver? Are these things still holding? No, they're dumping too. They're not red yet, but look at this shit. Gold it was up 2%. Now it's barely up 0.2. Silver was up 9. Now it's up 4. They're going down with it. They are going down with it. COPEX just turned red on the day. That's down 4%. That was at 91. Now that's at 87. However, you got your boy Galio that continues to say that gold is still a pretty important asset.
Still the safest.
Yeah, it doesn't change by the day. Gold is up about 65% from a year ago and down about 16% from its high. And I think people make the mistake of thinking, is it going to go up and down and should I buy it? And instead, not whether it's individuals, but even more importantly, perhaps central banks or governments or sovereign wealth funds should say, what percentage of my financial assets, what percentage of my portfolio should I have in gold? And think about that percentage. And then as the price goes up and down, if it goes up too much, you sell out to get back to that number, it goes down too much. But to keep a certain percentage, because it's a very effective diversifier to other parts of the portfolio. I think that it's best to say, if you didn't know what markets were going to do, what should my allocation be to different markets? And because gold is a diversifier, in other words, when the bad times come along, it does uniquely well. And when the good times are prosperous, it less so. It's an effective diversifier. So I would say that perspective. I'd say the most important thing is to have a well-diversified portfolio. So I'm not saying run out and buy gold at hot because the market's going to be hot, but more to think strategically about what is the right mix of assets to own, whether you are an individual or a central bank or a country or a sovereign wealth fund.
Ray, you mentioned capital war. Do you believe that we are on the cusp of a capital war? So much of the market focus right now is on the president's trade and tariff agenda. We often talk about the implications of the trade war that we see unfolding. What about a capital war?
We are on the brink. That means not in, but it means we are quite close to, and it would be very easy to go over the brink into a capital war, because there are mutual fears. For example, if you were to take the conflict even over Greenland related to Europeans and the United States, there could be a fear that European holders of U.S. denominated assets could have that they could be sanctioned in a sense. They might have a fear in one way or another. And
by the way, the 10-year is not really cooperating either. Look at this thing. Still basically at 4.3. So what Dalio's been saying, I mean, he's been right for the past few months now. He's been saying this for the past few years, which is that investors don't really want as much exposure to the U.S. And they are dumping treasuries. Now, it's not like some complete collapse of treasuries, but the fact that we've cut rates by 75 bips last year and we're probably going to cut by another 50 bips, ONDOS, by the way, down 13%, and we still can't get treasuries to go down, I think is an issue. By the way, there was another headline on ONDOS just now. Someone put it up right here. J Capital Research cautions on ONDOS. ONDOS won't live up to the hype. Maybe that is also causing some pain for ONDOS. Micron down 8%. That one's still getting. NVIDIA got the rebound above 175 at least, which is nice. Let's see if that one can now maybe get back above 176, which would be really good. Iran down 15. Ugly. There you go. Iran 46.39, 15%. ServiceNow still goes red. Hood still trying to hold above 80. And then SPY at 688. Again, all of this without any super meaningful headlines. Even that Trump soybean thing was not enough to really get the market going. But we're still seeing a decent chunk of pain that's playing out. AMD, wow, biggest decline since 2018. That's crazy. That is absolutely crazy. Biggest decline since 2018 GME, that's green. All right, GameStop. I guess that's the name that is up. Oh, there is this NVIDIA headline that was in the morning. I forgot to mention this, but this is just, it's becoming laughable. NVIDIA AI chip sales to China stalled by U.S. security review. Every other day there's been China wants it, China doesn't want it, China's getting it, China's not getting it. Maybe that was your reason for the NVIDIA sell-off today. But it's almost like, does the market even care about this China stuff? Or do they believe it? Regional banks are getting some love. NVIDIA back below 175. Look at the KRE, 72. Regional banks have been a big winner in terms of rotation. And they are also a big part of the IWM, which has been helping out. KRE, yeah, 11% year to date. You know, the regionals, they were one of the sectors I was looking at in December after all that bubble talk of like regional banks are going to fail. And it turned out to be an absolute nothing burger. Strengthening credit, steeper yield curve, lower rates is better. M&A activity. Truist is probably up this year. It's one of my favorite regional banks. Yeah, that's up. Look at that. 2% on the day, 11% for the year. For everyone asking, where's the money going? That's your answer. It's going to JP Morgan. It's going to Lilly. It's going to Truist. It's going to IWM. And it's leaving large cap and high growth beta tech. That's where the money's going. It's also probably going to cash. But that's where most of this money seems to be going. Yeah, FLG. Jason was talking about that last night. PNC. All these names have been catching a bit. Okay, let's ask this question, because me and Jason were talking about this yesterday as well. If you had to make a argument for the end of the year, here's the question. By the way, 64% of you said the SaaS carnage is fake. Simple question in the poll. Will value outperform growth by end of year? Will value outperform growth by end of year? AKA Verizon beats NVIDIA by end of year. NVIDIA, she's losing it. 174.60. She is losing it here. Palantir losing 140 again. She loses 174. I think it gets pretty ugly. So this would be the spot where we need a little bit of a bounce. Hoodie, 80.29. ASTS down 12. ASTS is about to go below 100. Rocket Lab is 71. BMNR is down 7. Oklow's down 13. I mean, SMR is down 10. USAR down 12. MP down. This is a high beta flush out, folks. I don't think anyone can disagree. This is a high beta flush out, and it might reverse quick, but it is definitely getting flushed out. Iran down 15. Tesla, oh my, $7 from the 300s. We haven't seen 300 on Tesla since October. No, mid-September. We saw it for briefly in November, but really since October, we haven't seen that. EOSE, this is another hyped up energy name. Not saying there's not something fundamental here, but it still trades at 54 times sales, even after being down 15%. These are your names that are getting hit. Yeah, and the S&P is still less than 2% from all-time highs. Fear and greed, we are at definitively fear now, although we were close to neutral. Bloom Energy, down 14%. Still up, like, what, 60% for the year? So, again, if you bought it in January, you can't be that upset, but if you FOMO'd into high beta last week, like, man, it's not pretty. Honestly, anyone who didn't FOMO into high beta should give themselves a pat on the back because it's hard, especially when you see SanDisk go to 700. It's hard to not do that. Like, it's still a skill, I think, for a lot of people to just not get into the temptations of this shit. And you really do deserve some credit because things could be a lot worse if you bought Rocket Lab at $99 or at $89 or at $80. So at least if you didn't FOMO too heavy, then it's not horrible. S&P right there, 686. Now, again, if you're averaging up into a position you already own, that's different. But like if you're initiating a position for the first time after Bloom was up 70% for the year, like you're just taking a much bigger risk, you know? Shopify, 113, a little bit of a bounce off 109. TE 764. This thing was 960 last Wednesday, bro. It's almost pushing $10. Enphase, are we still holding Enphase pump? Enphase, yeah, Enphase 36%. That one's not really dying down yet. BTC. Is this the lowest on BTC in the past month? No, we hit 72 at one point. All right, so seeing a change there would be important. Someone just bought $14 million of Micron $400 calls for February 20th. So you got the memory bulls that are not necessarily leaving right now. Are they still streaming Bascent? They are still streaming Bascent. Let's see what he's saying.
We have energy certainty with our energy dominance, and we have regulatory certainty as we are pulling back the regulatory morass that was highly harmful to both small and large business.
Absolutely. And as global competition for capital intensifies, the United States risks falling behind if our public markets also, I must say, remain costly or inaccessible for growing companies. How important is capital formation reform, like the reforms included in the INVEST Act? Again, 22 bipartisan bills that we brought to the floor with the support of 87 Democrats. How important are these reforms to maintaining U.S. economic leadership and long-term growth? Quickly, sir.
Congresswoman, they're vital. And what we have seen, as you correctly outlined, is since the early 2000s, the number of public companies available for Americans and indeed international investors to invest in has greatly diminished.
All right, folks. I think that's it for me. I'll be back on the close. We got Google. That'll be a big one today. We'll see if this stuff can reverse. I mean, you're not getting too many important quotes from Bascent. He said some stuff about crypto will cooperate towards the end of the day and see how some of these names react. Bloom still down 14, Tesla 408. I don't know. 11:30 to 12:30, you tend to get somewhat of a little intraday bounce. Maybe we'll see that over the next hour. If not, then obviously we'll see some of these prices go lower. But you do have Google later. Google could definitely help the S&P. We're going to see if the rest of these names can rebound. Palantir, a little bit of a bounce above 140. Amazon 236. CoreWeave down 4. ASTS down 11 as well. JP Morgan on software. We are now in an environment where the sector isn't just guilty until proven innocent, but is now being sentenced before trial. Wow. What a quote. I mean, they're right. And maybe that's why this software sell-off is a little too aggressive. Okay, that is it for me. NVIDIA-backed AI voice startup 11 Labs hit $11 billion valuation as it as an eyes IPO, really? 11 Labs wants to go public? I thought they were going to stay private for a while. All right, so you have some new IPOs coming into the ecosystem as well. All right, word of the day. Let's see what ChatGPT gives us here. Remember ebullient yesterday? That word was crazy. Okay, word of the day. This is what we got. This is what we got. Doug says no earnings can save this market. This dump is unrelated to profitability. I kind of agree. I don't know if Google is going to save anything because this dump doesn't feel like it's because of earnings. It feels like it's because of something different. Hold on. Bro, it's not just me. Ineluctable? Ineluctable. Okay, before we even get into this, how do you say this shit? I swear on my life I'm not trolling right now. Like, is it actually... Look at the Google thing. Look how many parts of the word they have to separate to say it sounds like. There's 5 different dots here connecting the word. This is not just me, bro. Ineluctable. That's what I'm going with.
Ineluctable.
Okay. It's a little off there, but whatever. Ineluctable. Did anyone really think it was ineluctable? Impossible to avoid or escape. Inevitable. Compounding is ineluctable. Ignore it and you fall behind. Respect it and the time does the work. Okay, so the SaaS carnage feels ineluctable. Did you really grow up in America? Look at this. Heavy word, heavy truth. Thanks, ChatGPT. Thanks, ChatGPT. All right, ineluctable. Impossible to avoid or escape. Inevitable. SaaS carnage right now feels ineluctable. And hopefully we move on from it in the coming days. All right, that's what we got. Thank you all for being here. I'll be back on the close. Jose and Neil will be with me 3:45. We'll start Google. What else besides Google? We have Qualcomm, Elf, ARM, Snapchat. Those are the main ones. All right, so we'll be looking at those earnings after the bell, and we'll see what we got. Thank you, everybody. Appreciate it. I'll see you guys at 3:45 for Google. Bye, everybody. Have a good one.